Testing. Test, test, test. Hello. We live? We are live. Welcome, ladies and gentlemen. A little late this morning, but we're here. Oh, yeah, I forgot. If you're watching this, you're most likely watching the live stream recap. We are live. Market open to market close Monday through Friday. Make sure you hit that like button. Also hit that subscribe and notification bell so you can be notified the second we go live and also when we post videos. God bless you guys. I hope you're having a good day so far. It's going to be an exciting one. Abivai is getting clapped right now. They had a FDA extends review period for SNDA. It's one of their arthritis drugs or something like that. But they are not doing well. Market's down quite a bit. Bond yields are coming up again. So it's going to be interesting. I hope you guys are ready. It's going to be a fun day. What's up, Jake Waters? Hope you're doing good, bro. Do. Portfolio's going to get clapped again. Maybe. We'll see. I need to like my own video like a pro.
We're hoping things will pick up by Q3. Yep.
Test, test. All right, we good. I think. Why is it so quiet? Oh, that's why. All right. Got that. Like the video on this account. Ooh. Pop out the chat. Whoops. Get the Twitter up. We're good to go. We got 10 seconds till the market opens. I hope you guys are ready. It's going to be fun. Ding, 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 ding. Let's go, baby. Let's go. Hope you guys are ready. Woo! It's going to be a good day. I kind of want to get a AT&T play because if the market is going to get clapped off interest rates, AT&T should come up usually. I mean, it's not like a for sure thing, but it's been consistent. It looks like we're going to get clapped. What do some spy plays look like? Woo. These are already up a lot from the morning. Jeez. Look, pretty decent bounce here. Volkswagen on. Damn, Volkswagen's up a lot, bro. What's going on with Volkswagen? Why is it up so much? Does anyone know? What's up, Trisha? How you doing? Glad to see you. Yeah, see, those AT&Ts would have been decent already. Facebook's up quite a bit, but Apple and Microsoft got clapped. EV Volkswagen. They've already got EV though. I've seen the frickin' Volkswagen Golf in person multiple times. That's weird. I don't know. I don't think I have any plays on my Robinhood or anything. Let's see. Sup, Noah? Hope you're having a good morning so far, bro. Hey, hell yeah, bro. That's good. I'm glad you don't got the vid. Very, very good to hear. Damn, that Wells Fargo, though. Jeez. Yeah, these went up a little bit. That sucks. I knew that Wells Fargo was decent. Where's the Dollar Tree at? Oh, they upped the spreads again. Bastards, bro. We're gonna have to wait a little bit on that. Ford to launch flexible work from home plan as employees return to offices this summer. That news has been going through the feed multiple times. Damn, I guess I should have got that spy play in the morning. I thought we would see a bounce at least before it started to go. Shit. Dude, Zillow's back below 140 again? Are you kidding me? What is this? More complex concepts. I mean, I guess. I think as just as long as you can read the candles, I think that's all that matters. It's gonna be applying it in real life that's gonna be the difficult task. Like just reading it out of the book is pretty easy. But like when you come to the market, actually applying it, you know, because you have to deal with your emotions, whether to take the trade or not. Like, there's a lot more that goes into it. Dude, AAL's at but 28? Are you kidding me? Oh, okay. That was not accurate. I'm like, geez. That's messed up, bro. Where's Airbnb at? Oh, yeah, we do have Powell live today. I don't know when he goes live, though. Let's see. I think he goes live in 3 or 4 hours. Something like that. Something like that. Damn, UAL at 60. Boeing's coming back up. Dude, Root's getting clapped. I kind of like Facebook for a put, but the options are just way expensive. That's good that you're reading that book, though. It's a good one. 'Tis a good one. Dude, all the puts are so expensive. Yeah, I mean, Apple is up a lot, but the whole market kind of came down. You're seeing that. You're seeing the rotations come back into play. You're seeing a lot of the airlines on the high tickers and banks, and you're seeing everything else on the low ticker. Just like that last 2 weeks when the bond rates were going crazy. It's literally the same exact thing. It's kind of interesting. Wells Fargo call just before the bell. Yeah, Wells Fargo's killing it right now. I wish I would have picked up that play I was looking at. That was fire. I think it's already up like 100%, and it was a longer term option. What's up, Hector? My boy, my guy, my boy, my guy. I'll call you my guy. I don't like calling you my boy. That's kind of weird. My guy, that's my guy, that's my guy, yeah. That's my guy, that's my guy, that's my guy. Hope you guys are all having a good morning so far. Make sure you hit that like button if you have not. Let's see. Ooh, another down day in the long term. That's what I'm talking about, baby. That's what I'm talking about. Let's go. What are we down on, though? Zillow. Yep. Zillow is clapping us yet again. And down quite a bit on Tesla, too. And dude, why did I ever buy Big Commerce, bro? That has not been good. Stop the sell off. You can't stop the sell off, bro. The bond yields are kind of going crazy. Low key crazy. Apple's getting slept. What's a Zillow? What's a Zillow? Yeah, I mean, we're only down 1% on the NASDAQ. It's not that bad. Could be worse. Definitely could be worse. That's all I'm saying. .29%. It's nothing, bro. It's nothing. Bro, the market's most likely coming down. Might get some positivity more towards Powell, but I don't know. We'll see though. I could be wrong. And I think Powell's in like 4 hours, 3 hours, something like that. I mean, he's not going to mess it up. It's literally like that's going to be your chance to fucking get a play, most likely, because the market's just going to come down because of the bond yield. It's not going to be because of Powell. Powell's going to bring some hope to the market, and then when Powell talks, depending on what he says, that's when we're going to see the move. But I feel like he's just going to say the same shit he always says, and people are going to get butthurt about it, and the market's going to get clapped, most likely. But I mean, we'll see. We will see. Hopefully I'm wrong, I guess. Could hope I'm wrong, but I don't know. It's hard to say. Realty Income announces next dividend, 0.235%. Woo. they giving you a whole freaking 0.0005% more, or cents more, whatever. That's great. That's great. Clap market is a buy-in. Amen. I hope the market gets clapped. I want to buy more stuff. Honestly. It'd be nice if we saw nothing but green, but this is the market, bro. 'Tis the market. Pretty big bounce here, though. I mean, we're still only in like $1 range, so it's not that big. Or Citi. Citibank could be a decent play. The options are just really expensive. DoorDash is at all-time lows. That's ass, bro. That sucks. Dude, we're getting so clapped on DoorDash, bro. Woo! Getting so clapped on DoorDash. That's funny. That's kind of funny. Zillow's nothing compared to DoorDash, bro. DoorDash is bad. Like, really bad. It's kind of funny, honestly. I can't believe how clapped DoorDash is getting. It's actually like a decent company. I don't know. Maybe I'm just biased, but I like DoorDash. They kill it. They're the only reason most of your restaurants are still in business, I feel like. But I don't know. That's just me. Hate DoorDash, Uber, Lyft. Why, though? They're all good companies. No idea how much I spend this month for Bro, I have an idea. I deliver to the same people all the time when I DoorDash. Like, some people run that shit. Dude, I made a lot driving for. I made like over $1,000 in a week at the height of the pandemic. It's kind of nuts. I mean, granted, I was door dashing all day, but $1,000 in a week is pretty decent just for driving. The way they treat their gig workers. I mean, I love it. I don't have to deal with anything. I don't have a boss. I don't have anyone telling me what to do ever. I don't have to do anything. Literally, I don't have to, do anything. I just do what I want. It's great. It's actually the best. They don't really pay like shit, but if you know how to game the system, then you're good. But if you're just if you don't understand how it works, then you're probably going to get clapped. You're probably not going to make that much, but I mean, it's good for me. Phone calls from customers. I mean, not really. We're only in like $1 range. The bottom of today so far is 390.86. Top's not even. The top is 394.86. We're pretty slow, actually. It's because of Powell. Most likely, we're gonna see something. I mean, the Nasdaq's not even down that much. It's only 1%. Like, that's a lot, obviously, but it's not no like 3-4%. Definitely could be worse. I kind of want to do a spy play. Powell's speech is in like 4 hours or something like that. We're gonna watch it live. Hey, that Baba though. Coming back on the Baba at least. Yeah, one of Abby Vi's drugs has a extension on the FDA review or something like that. Very weird. See, that's why I didn't take the put play. This is like really weird right now. Going back to 2018. Myrna's been moving crazy lately. There's been some wild option plays on there. Like multiple 1,000%ers. That red volume's disgusting. $45%? Jeez, bro. You need to diversify a little bit. That's kind of ridiculous. Like, you've never even used Moderna in your life, I don't think. Like, have you? Like, be honestly. Maybe besides the COVID vaccine. That's about it. I mean, it's good, but that's just not. I'm not a big fan of healthcare, personally. Handing out free money. I mean, I guess. I don't know. It's at least it's an equity. It's not an option, but still, like, I don't know. Not a huge fan of that. Tesla was 100% of my portfolio. That's funny. I bet that's a lot of people in the market though. What's up, Sangwon? Glad to see you, bro. 0.25%. That's what the Fed rate's at. Why are we watching two SPY charts? The hell is Velodyne LiDAR? Oh, that's some like EV. Dude, get some more solid companies. Like I know the hype is like tight, like it could hit, but just get some solid companies that are gonna be here in 10 years, bro. Like you don't know what's gonna happen with any of that EV shit. Like you don't know what's gonna happen with a lot of these healthcare stocks. Like Coca-Cola's decent, but I just don't think you need to be getting into the hype. Cola is God. All right. This is stupid. Oh my gosh, I'm a little late to that, aren't I? Gosh dang it. Stupid. Stupid, stupid, stupid. Yeah, I'll wait. I feel like we can get a little more bounce here. Maybe. I don't know. Hype can pay off or fuck you. I mean, even in the long term, like if you're buying something because you think something is going to happen, I don't know. I'm not a big fan of that. I'd rather just buy a solid company that's had a consistent history of gaining value, and people have always wanted it for the most part. Like, of course, you can hit some of those like random plays, but I would just go small on those because you can also get clapped. There's just so many good companies that have been here for multiple years, and they've just proven themselves. It's like a DraftKings pick. Like honestly, like you're looking for some like all-star players or some rookies you expect to do good. Like I'm going to go for the all-star players, bro. I ain't going for no rookies. Like maybe we'll get a little bit of rookie in there cuz they're cheap, but like I want all-stars. Hall of Famers, bro. Like I want Kobe Bryant, I want LeBron James, I want Michael Jordan. I don't want frickin' what's that one fool? I don't even know his name. Labal. I don't know his name. See, I don't even. That's yeah. Whatever his name is. Bruh. ETF gold. Just buy physical gold. Why would you buy paper? Like the point of gold is because you can get it physical. DraftKings ain't half bad. Nah, DraftKings is pretty decent. Nah, just buy physical, bro. Scrooge McDuck. Have you seen that? Have you seen that episode of Family Guy where they get rich, and he fills that what is it? He fills that thing with gold coins and tries to dive in it. He just breaks his fucking face. Ah, all these solid objects create one solid surface that you can't dive into. So funny. This is whack. Market's moving crazy. I don't think I'm gonna do a spy play right now. I kind of want to, but it's just too wild right now. Too many weird swings. State won't let you play DraftKings. It's not a bad thing. Lipozene. Dude, wow. That's a big ass candle on there. Lipozene's at least decent, though. Like, it may be a penny stock, but at least its history is above pennies. It's just the last earnings they had, I think, clapped them. Yep. Should have hit the spy play, bro. I don't know what the fuck I'm doing. Shit was easy. Matthew's an OG, bro. He's in here every day. Ah, come on. Come on. Yeah, these moves are crazy, bro. I don't even know what you're talking about, bro. Polish government announces nationwide lockdown. Lockdown since December. Or I think they just extended the restrictions or something. Yeah, they just extended the restrictions. They've been locked down. Who's Powell? You don't know. You really don't know who Powell is, Trisha? The Federal Reserve Chair. Duplicate money. They don't duplicate money like that. They literally just buy treasury bonds. Like, I don't know where you guys like get this information that you think they just print money like that. It's not. That's not how it works. Like, yeah, they're gonna print money now that the frickin' that bill got passed, but it's not like it's something they just do. I don't even know what SEC is. I forget what the SEC stands for, but Federal Reserve is just they just control the economy. Well, they don't like control the economy, but anything to do with the economy, the Fed is pretty much there. You'd have to look more into it. It's kind of hard to explain exactly what they do because they do a lot, but it's literally just like a group of economists that get together and they just go about how we should approach certain things to make the economy stable, I guess. Because if we didn't have the Federal Reserve, the economy would not be stable at all, and things would be pretty fucked. I mean, literally, if we didn't have the Federal Reserve, we would still be down 50% on the market overall. Like, the only reason you even got the bounce you did is because the Fed cut rates. I don't even remember what the SEC stands for, honestly. Oh yeah, Security and Exchange Commission. But the SEC is just like for it's so like big companies don't manipulate the market to get rich off of their stocks and stuff like that. Like if you saw kind of like the GameStop thing, the SEC I'm pretty sure they sued a lot of those dudes or they're going to clap them. You just don't even like really hear about it, but stuff like that, you'll see the SEC focus more on that because they just make sure that nobody's manipulating the market, I guess. Like if we saw some company we all know go crazy, like kind of like GameStop, but even bigger than that. Like if we saw Apple go up like 1,000% in a week or something like that, they would probably be investigating Apple. Like why is your stock going up that much when you're a multi-billion-dollar share float? Like I don't know. But there's a lot that goes into it. You could probably read hours of information on both the Fed and the SEC, so it's kind of hard to like make it simple. Even I probably don't even know everything they do personally. I just know the market worships the Federal Reserve. That's that's all I know. They literally worship him, and some people worship him because they hate him. Some people worship him because they love him. But I mean, it's like I don't know. You shouldn't hate the person who saved your market. That's all I could say. Ooh, 2001. I forgot your name. Isn't it 100 steps forward or something like that? I got to translate it again. Yeah, 100 steps forward. Appreciate you donating the 2001. God bless you, bro. Hope you're having a good day so far. What's up, Ankara? How you doing today? Brian O'Shea. I don't think I've seen that name in here before. So, if you're God bless you if you're new. Appreciate you being here. It's time to sleep. Oh yeah, it's like 1 a.m. over there, huh? Well, all right, bro. I appreciate you stopping in, showing love. Hope you have a good rest of your night. Korea time. You just gotta stay up all night. Wake up later, stay up all night. That's all you gotta do. But not a recommendation. Just become a night owl. Get on that. Uh, get on that graveyard shift. Lost money in options. That's okay. As long as you learn something. Nah, I ain't doing a face cam. That'd be creepy, bro. I stream for 7 hours a day. You think I want a bunch of stock traders looking at my face for 7 hours a day? Nah, fam, I'm good on that. That'd be creepy as fuck. Like, it's mostly dudes in here. We literally have Trisha, like Susie, Lisa, Kristen comes in sometimes. Like, that'd be creepy, bro. I don't want to I don't want a bunch of dudes staring at me all day. I'm good on that. All right, peace out. 100 steps forward. Oh yeah, it is St. Patrick's Day. I'm not even wearing green. Wait. Oh, I got some green on my sweatpants. We're good. I'm ready to go. I'm festive today. Down 17%? What are you doing that you're down 17%? Are you trading options or is that just in the long term? Cuz I mean, that's quite a bit to be down. Like you just need to move slower if that's the case. Like you're trying to go too fast. Trade Bitcoin futures? Well, just be careful with that, bro. Make sure you're focusing on that long term. Like trading's cool, but long term, bro. Long term. Like we don't need to make that fast money, bro. We can get rich in 10 years. We don't like one literally one play. Like I know like the money seems dope making those quick gains, whatever it may be, whatever your thinking is about it, but like realistically, you're not going to get rich off one play. What you're going to get rich off is making a bunch of really good small decisions. Like, I don't know if you guys are in the stock market live chat. We philosophized on this yesterday. I watch the philosophy every single day after the market closes. I go back and rewatch Josh's stream just for the philosophy, and he said it perfect, bro. Like, you're literally never going to get rich. I mean, you could hit a good play, you can make some good money. Like that's I'm not going to ever say that's not a possibility, but you're not going to get rich by hitting one play. You're going to get rich by doing a bunch of small things consistently. Like just trust, bro. Trust. Like I know it seems like that's like I know it's sometimes it seems like trading is the only way you're going to make money because the long term's so slow, but hasn't even been a year, bro. Hasn't even been a year. Like just wait. Where's everything going to be at in 5 years? You know? Like just small decisions. Small decisions. Go slow on the trading. Like you don't need to hit a big play. Like literally. I do literally like $20-$30 option plays. I've played so small. And most of my money goes to the long term. Like if you want exposure to some like riskier plays, there's nothing wrong with that, but you don't need to be dropping, you know, 30% of your portfolio on it, like 20% of your portfolio. Literally do like a couple percent. Like if you want to play a penny stock, you think a penny stock's going to be a good trade, put like 100-200 bucks in it. Like why are you putting like 2 grand in it, you know? Like you don't need to do that. It's not worth it. You could literally put like 1,900 bucks into the long term, then play the 100 bucks on whatever risky ass penny stock you want to play. Then like if you lose, whatever, you lost 100 bucks, who cares? But like if you lose $2,000, that's gonna fucking suck. Of course, if it hits, you're not gonna make the same amount, but that's not the point. You need to understand like what you're doing. Like you should expect more downside than upside when it comes to like risky plays. Expect the worst, hope for the best. That's what they say. That's what I've heard. I don't know. Olo? What's it? Olo? Olo's not a stock, so I don't know what that is. Risk versus reward. Amen. Amen. It IPOs today. Oh, I don't know what it is though, but just be careful. Like, let's see, that's what I'm talking about. Like, why do you want like an IPO? Like, how much are you even gonna put in it? You know, like I understand IPOs would be dope. They're fun, but why do you want an IPO? There's so many other companies that have history of being good. Like, I don't know why you'd want an IPO, you know? Like I said, if you're going small on it, that's fine. Like, there's nothing wrong with that, but you don't even know what that is. Have you ever used Olo? Like, what is it? Let me look. What is it? Olo. Olo Inc. What is Olo Inc? Does anyone know what Olo Inc is? Because I do not. Olo Inc. What is this? I'm trying to find out what it is. Because I just want to... Shake Shack? What is this? Is this like another like Uber thing? Don't stop believing. Food ordering software? I mean, at least it's only IPOing at like $20. That's good. It's not low like $300 or $100 IPO. That's always good. Oh, online ordering. Duh. That's funny. I mean, it looks decent, but that's not the question. My question is, have you ever used Olo? You personally, have you ever used it? Because if you haven't, like, I don't know. I don't care what the news says about it. I want to know if you or anyone you know use it, because if nobody you know's used it and you haven't used it, like, then it's probably not that good. Honestly. But it looks interesting, honestly. Like, I actually think it looks pretty interesting. AP. Didn't we already look at this? I swear someone called this frickin' APRE out before, but I'm good on that, bruh. It's actually kind of decent for a trade, but I still don't like it. But I mean, you can do whatever you want. This is just how I view the market. I don't like to invest in things I don't use, because there's no long-term outlook to it, you know? Like, if it's something I see every single day. I personally use. I know people use it. It's a lot easier to want to invest in something like that, especially for the long term. But like if it's something you've never used and you don't even really like know about it, it's going to be difficult. Like I don't want to be that guy to like clap people's ideas, but there's just a lot of people in this chat that always want to buy IPOs, and I don't want to see people doing that cuz I mean literally every single IPO I've ever bought has gotten clapped. So it's like I don't expect anything out of that. Like Petco clapped. Uh Big Commerce, Omega clapped. DoorDash clapped. Lyft clapped. Like what is the only IPOs that have done good is Airbnb, Planter, and Snowflake kind of. But I think even Snowflake is back down. I don't think any other IPOs have actually done good. You just got to be careful. Like I don't I just I don't know. I just don't have any expectations out of the market. So it's like if I'm gonna chase like a 100-200% gain, I'm just gonna trade an option. I'm not gonna buy some like random stock. And yeah, Matthew's kind of right. IPOs are decent for quick flips, but most of the time they do get clapped. Like why? Like just wait. Like 2 years, 2-3 years. Wait to see what the IPO does. Honestly, see if the company even lasts. Or just go small on it. Like don't be dropping a big bag on it. That's all I like. If it really like you really want to trade it, just don't drop a big bag on it. Any IPO or any like penny stock, any risky play, like you don't need to drop a bag. Literally, just go small. There's nothing wrong with trading those things, but like some people take it to a crazy level. Angel investors and founders get rich. IPO buyers take all the risk. Amen. Amen. Baba's kind of killing it. I think we're almost at break even on there from our average down. Pretty close. Oil's still up quite a bit, bro. I don't know what you're talking about. It's just holding that range. Like you can't expect everything to just go straight up. No, it's not. It's not gonna hit 100. That would be insane. Like literally, oil hasn't been 100 since what 2014. Like you can't really have that expectation. When was oil at 100? I'm looking. Yeah, literally 2014, middle 2013, 2014 was the last time oil was up that high. You can't have that expectation. Like the most I would expect is 65, but judging by the chart, it's most likely going to be sitting at this level for a while. Or did I say 65? I meant 75. But 100, that's kind of out of hand. Bought JD at 107, now it's 84. Well, why'd you put that much money into JD? Like why? What is JD? Have you ever used JD? That's my question. Why'd you even buy it? Like I don't know. Just take the lesson, bro. Like you bought that at all-time highs. Why would you buy something at all-time highs? Like I know it sucks. That's a lot of money to lose, but I don't know what like buying it at all-time highs, like that's not a big deal. Like I've done that before. It's not really a big deal. Like you don't need to stress on that. But why did you put so much money in there at all-time highs? Like what did you expect out of it? Really? Like I want to know. I'm not trying to be like a dick. I really want to know what was your expectation of that, because there's a lot of people in this chat. They could really learn from your experience. When Chinese shares are going up. Yeah, but what? Why would you drop what? You at least put like 5-10K in there if you're down $2,000. Yeah, you put like 10K in there. Why would you put 10K into one stock? Like what was the idea? Like what did you think was gonna happen? Like why didn't you just put like 1,000 in? Why didn't you put like 500 in? Why 10K into one stock that has it even had history? Like let's look at the history of the stock. 2 years ago, this thing was worth. Let's see. Let's not even look at 2 years, or actually, let's look at like 10 years. So this IPO'd in 2014. It's literally never been above $50 until this year. So I just want to. I don't know. That's just a lot of money to be putting into one stock that you don't even use. You don't even know anything about. Like this is what I'm trying to get to you guys. Like you don't need to chase the bag. Literally. There's so many good companies you can buy. Nothing happening in the market right now matters. Literally. nothing in the market happening right now matters. Like if you know you're buying solid companies that are going to be here in 10, 20 years and they have history of freaking going up in value, like you can't go wrong. I don't care how slow it goes up. I don't care about anything like that. But if it has consistent history of doing well, like what's wrong with those stocks? Why do you guys have to chase these bags? I don't get it. I don't understand how to play on the market. They were high and I decided to continue. It'll grow. Sorry, I'm new and read about the company. No, I'm just asking because I want your insight. Like I'm not even trying to be a hater. It's just I want people to understand. Like not even just you. Like there's too much risk in putting money into companies you don't understand or even know about. Like I could have done like 3 spy plays already and did pretty well. But I'm not risking my money for a spy play. I don't know. But you guys got to be careful with what you read too. Like there's a lot of bullshit out there. Like you don't if somebody's telling you to buy something because it's going to go to a certain price, stay far away from it. It's not worth it. 100% it's not worth it. I don't even think you need to like research or anything. I think you just need to be able to look at a chart and just understand what you're putting your money into. Like I don't even think you need to look at the company's filings. I don't think you need to look at their financials. I don't think any of that matters. Like it helps, of course. It gives you more confidence for the future. But realistically, you can just open a chart, look at the 10-year, 20-year, however long it's been trading, and just make a good assessment from there. If the stock's already up, 100% in 2 years, or 1 year in this case, like, what is this up? 1 year ago, this was $35, so 70 would be 100%. You bought it at pretty much a 200% premium. Like, you just need to understand what you're buying and what you're putting your money into and what levels it could, or just be patient. Like, if you really wanted to buy JD and you thought it was good, like, why didn't you wait until it came back down? Why'd you have to buy it, like, right then and there, Why did I buy Zillow at $150 and now it's at $136? Like, I thought I was getting a good discount on Zillow, but realistically, 1 year ago, this was a $30 stock. So I'm paying, what, 400-500% premium on that? It's not the best. You just got to be careful. But that's why I only put like $1,000. Or how much did I put in there? I put, like $1,500. So I even put more than I wanted to in there. So that's not good. But market's getting clapped here. I really just think you guys need to look at the chart and just be able to make a good evaluation by yourself. Like, you shouldn't be going off what you read, what other people tell you. Like, that's none of that stuff's gonna work. It could work, but like, why? When it's just, you could just make it simple. But on Friday's price, we're going more lower in us. I'm looking better. Point checking. Unfortunately, I have no experience. Well, you shouldn't sell when you're down on something. That's for sure. There's no point in selling. Like if you had a plan going into the stock, you stick to the plan. Doesn't matter. It doesn't matter if it goes down 50%. Doesn't matter if it goes down 100%. Like, you got to stick to your plan. You got to stick to your guns. Nah, you shouldn't use a stop loss. It's a long-term purchase. It's not a trade. It's a long-term. Like, there's no point in, if you had a expectation to hold that a specific stock for a long term, you don't need to sell it. There's no point in that. You literally don't know what's going to happen in the market in the next 5 years, 10 years, 20 years. Like all you guys see is what's happening right now, and all you can do is make freaking assessments of what's happening right now. But what if you literally, I did this with Tesla one time when I was a newer trader. I bought like 3 shares of Tesla. It went down like 20-30% or something like that. I sold it. Next thing I know, Tesla's at like $900 the next month. Like, why would I just, you should just never sell at a loss. If you had a plan going into something, stick to the plan. Like, there's no point in selling at a loss. And that's why you go small. You don't put in money you're not willing to lose. Like, you should be any money you put into the market, you should be willing to lose that. I'm down to lose every single dollar I have invested. Like, I don't give a shit. I'll go broke tomorrow. It won't matter. I'll make more money. Doesn't matter to me. But that's not going to happen because I'm buying solid companies and I'm diversifying my money into solid companies. So if one of my riskier companies I invested in goes to shit, at least I've got solid companies that I still have money in, you know? Hey, I appreciate you, Roman. Just, if you ever have any questions, bro, feel free to come in here and ask. Like, you don't need to do stuff like that, you know? There's plenty of good information out there and free information that you can use to your advantage. You don't need to go out trying to chase something, especially when you don't understand it. Like, you said yourself, you're new and you don't understand the market. Like, you shouldn't be putting that much money into something you don't understand, you know? The goat of kindness. I feel like I'm kind of being an asshole right now. I feel like I've been on a rant for a minute. I just want to see you guys do good, that's all. I don't want to see people get clapped. Like, I'll never stop preaching the long term. Banks only give, you think 4%'s too small? Like, come on, bro. 4%'s huge. If you put that 10K into a bank stock and you're getting 4%, that's $400 a year, right? Yeah, $400 a year. You're telling me $400 is too small when you literally just lost $2,000? Like, come on. Let's be real here. And the stocks grow because they have history of being solid. Like, you may only see the 4% dividend and think that's too small, but 4% is actually a lot, bro. Like, 4% is a ton. You don't even get 4% in fucking in a savings account. You literally get like 0.1%. Like 4% is killer. I guarantee like billionaires would be happy to get 4%. You kidding me? You put $1 million in 4%. What is that? Like 40 grand? 40K, I think. That's crazy. 40K off $1 million? Like you gotta change your mindset. 4% is a lot. No, it's not small though. You've lost more money because you're trying to chase bigger gains. Bigger gains equal more risk. Like you gotta change that mindset. 100%. I don't give a shit. Bro, I hit 100, 200%. Dude, I let 100% plays go out the window all the time. You guys have seen it. I've been up 100, 200% on an option. I let that shit go to zero all the time. Why do you think I've been taking profits lately? Like, you got to change your mindset, bro. You have to change your mindset. All right, for sure, Jake. Appreciate you being here, bro. Like, I don't care how small the gain is. I don't care if it's 2%. I don't care if it's 3%. Like, if you're putting your money into a solid vehicle that's actually going to give you a return, that's good. But if you're just putting your money into somewhere where you think you're going to get a huge return, then that's not good. Like, you can't be doing that. You're literally risking you're putting your money at risk when you do that. You need to slow down, bro. Like, go small on those riskier plays. What time's Powell? I think Powell is on in like 3 hours, 2 hours. I think 3. I need to look, actually. Because last time I looked at this calendar, the time wasn't accurate. Are we good? Can I stop ranting? Like I just love the long term, bro. I don't know. I don't like watching people chase these big gains. It's not cool. Literally, like, you guys think it's cool. You guys think like you're going to get rich off one play for whatever reason. I don't understand it, but it's not going to happen. I can promise you that. You might be able to hit one play and get rich, like, it happens. I've seen it happen, but it's not how you should approach gaining wealth. Like, literally, small decisions, bro. 10 years down the road, I would rather make 1,000 small decisions than hit 1,000% play any day. Any day, I'd rather make 1,000 small good decisions than hit 1,000% play. You heard it here. Shit, I'd rather do that than hit a 10,000% play. Fuck the 1,000% play. 1,000% play ain't shit. I see 1,000% plays every single day. Like, it's nothing. 1,000%'s absolutely nothing. Like, it's easy. All right, it's easy. But like, bro, 1,000 good decisions, 1,000 small good decisions. That's hard. That's difficult. What was I looking up again? Oh yeah, Fed Pal. The rant is on repeat. I know. I think I've said the same things like 3 times, but I just want people to understand. That's all it is. Like, if I don't repeat the same thing over and over again, people aren't gonna. It's not gonna click. You know. You gotta repeat it a few times, and then maybe it'll click. Maybe I said it a certain way where it just like clicked for someone, you know? Maybe the first time didn't hit the same, but maybe like the third time hit a little better, you know? I don't know. That's kind of how, but I don't know. I'll beat this till it's dead, bro. I'll freaking slap it around. It says 12:30, so that's like 4 hours or 3.5 hours. Pretty sure 12:30. It's got to be 12:30 because last time this calendar was an hour behind. So yeah, probably. I think. Let's see. It's almost 9. So yeah, 3.5 hours. Pal should be on. Wait, is the GameStop hearings on?
Put your arms around. Okay. Oh, that's perfect, you guys.
They have a GameStop hearing right now? Are you kidding me? We're not even watching this? You guys loved the GameStop hearing last time. Do you remember how many people were in here?
I'd like to ask you, you indicated that you had at some point been involved with
What's up, Crip Cap?
that you
Didn't understand all the risk. You were right. When the markets were growing up, I gained 120, and I thought it would be easy for me. But now I try to study, read more, and I can't understand what shares.
I'd be happy to, Congresswoman. I've used Robinhood. I've used a number of other brokerages. I was, quite frankly, very shocked at how quickly I was able to get set up for trading on Robinhood.
But I don't even think like
Expertise in options because I have a history of
I don't even think you really need to study. Like you don't even really need to
with that expertise. It's usually
do that much. Like you don't need to make the market difficult
to get permission to trade in certain
unless you enjoy it. Unless you really enjoy this kind of work and want to study it and want to learn more about it, like then yeah, run it. But like if you're just trying to put your money into a solid place where it could grow and live your daily life, um then you don't need to worry about that kind of stuff. You literally just got to be able to read the charts and make good decisions at the right time. Like if there's a stock you want to buy and it's at all-time highs or close to all-time highs or 100 200% premium, why do you have to buy it like right then and there? Why can't you wait a month and see what happens? Why can't you wait like 2 months, You just got to be patient, go slow. You don't even need to put that much money in. Like if you really really want to buy whatever stock you're looking at like that moment, like just go small. Buy like couple shares, 2 or 3 shares, maybe just one, and then go on from there. If it goes up, tight, that's beautiful. Maybe you missed out on some gains, but who cares? At least you have something in there. And then if it goes down, that's even better because you can just average down. It's beautiful. Like you don't need to put all of your money in at once. You just go slow and steady. Anytime I've put all of my money, like anytime I've put a big amount into a stock at one time, it's never gone good. But anytime I've scaled in, that's when you get the best return, in my opinion. Unless, you buy something at a really, really good time, but you'll know when that time comes because you'll see it in the chart. You'll see the overall market. Like you'll know when the time to buy is. Like if you would have bought stocks a year ago from now, you would be up hundreds, thousands of percent just on shares, Like just be patient, go slow. There's nothing wrong with going slow. There's nothing wrong with small gains. Like I don't know. I don't know. I think we need to stop this rant, though. I've literally been ranting on this for like an hour.
Which, as you point out, also tend to be higher growth, higher expected returns to your portfolio, without increasing the overall risk that you're facing within the markets. And what you're essentially doing is limiting the upside of these individual portfolios.
Unfortunately, no patience. But I decided to invest them to a market is good too. I mean, vacations are dope, but like, you have to have patience, bro. Like, I know you don't need to get rich fast. Like, what's gonna change, really? You buy a nicer car, you buy a nicer house, you buy more stuff. Like what? Literally, like money is not going to
about 20 years ago. And so
change anything.
non-accredited
Literally,
investors to that public company
it's
universe,
not.
we're limiting to them to a smaller
I
portfolio of
promise.
securities.
I promise you it's not. It's cool. It's great. Like I like money, but it's not going to change anything. You're still going to think the same. Your friends are still going to be the same. Everything's still going to be the same. The only difference is going to be the amount of dollar or the amount of zeros in your bank account. Like it's not going to change anything. You don't need that money fast, bro. I'm telling you. Just be patient. Go slow. Go on a vacation. Like enjoy your life. Straight up.
Let's go to you. Technology platforms like yours have
Also hit that like button.
investor access to
Make sure you guys are subscribed. We're live. Market open to market close Monday through Friday. Also hit that notification bell so you can be notified the second we go live and also when we post videos.
Do you think
This GameStop hearing sucks. Roaring Kitty isn't even here. I'm just kidding.
access early stage investment opportunities?
Yes, absolutely. And there are a lot of platforms now, the crowdfunding platforms that are opening up this space, and the recent regulations, I think, are very.
I just want to see Roaring Kitty. This is retarded.
To open up this space. I concur that the accredited investor rules are outdated.
All right, are we good now? Can we stop ranting?
The concept that
I'm kind of done talking about this. I mean, I'll never stop talking about the long term. I love the long term. I could talk the full 7 hours just about the long term, but I feel like we need to. I feel like we beat this one enough.
should be accessible to everyone. At the same time, if we are to look for investor protections in this area, they should come in the form
You have to
of
pay a
assessing
mortgage for 4 years,
and
bro.
ability to
What are you saying? A mortgage is a stock. Like your house is a stock. Come on, bro. Your house is a better asset than any stock you're gonna buy. Are you kidding me? Come on. Literally, what do you think I'm gonna do with my long term? I'm gonna fucking liquidate that shit when the time comes. I'm gonna buy a house. I don't give a fuck about stocks. Like house is way better of an asset than any stock you're gonna buy. At least it's physical. You can live in it. Like screw stocks. Why would you buy stocks when you could buy a house? Like at least your house doesn't go in value when there's some piece of news that drops on the day. And if you can get a good deal on a house, good location, like whoo. Come on, bro. Real estate's way better than stocks. Like come on. Come on. Like why aren't you increasing the square footage on your house to make it worth more? Like why are you investing in stocks? You could just be investing in your house. Like, I don't give a shit if you have 4 more years on your mortgage, bro. 4 more years on that mortgage, your house is going to be worth like double what it's worth right now. Like come on, bro. I bet you never even thought about your house as an asset until right now, but I'm telling you, your house is a better asset than any of these stocks on the market. I don't give a fuck what anyone says. Screw the stock market, straight up. Real estate is way better. You know? Wait, what? House price is up 79%, but that's worthless? Nah, that's not worthless, bro. That's your net worth right there. What do you mean? You can get a loan on your house. What do you mean? You can go refinance. Like that? Are you kidding me, bro? I think you guys don't understand the power of real estate if you think that. Like, no way. No way, bro. Your house is up 79%? You kidding me? Go fucking refinance that shit. Boom. You just got your full amount of money back from what you put on your down payment or whatever. Like what? Like, come on. Come on. It's not virtual money, bro. It's a physical asset. What? The stock market's virtual money. Are you kidding me? The stock market's garbage. Like, real estate's way better. Like, you have way more leverage on a house than you're ever going to have on any stock. Your salary isn't enough. Bro, you drop 10K on a random stock. You're telling me your salary is not enough? Like, you obviously have enough money. Go find another job. Sell stuff online. Like, you don't need to chase gains. Dude, your house is real money. Like, what do you mean? It's an asset. It doesn't... And, bro. Screw bro, come on. Like, cash is garbage. Like, why can't you guys... Screw cash. You guys need assets. Come on. Like, cash is good. Obviously, you need it. But screw that. You need assets. And you can just go refi your house. Like, just refi it. You don't even need to sell your house. You just literally refi it. You get cash in your pocket and you get to keep your home. The only thing that changes, maybe your payment goes up. Nah, your payment's most likely going to go down depending what you do with the refi. But even if it goes up a little bit, you got a fat stack of cash in your pocket. It doesn't matter. And you still get to keep your house. Like, screw that. No way. You're tripping if you think your house is virtual money, bro. You literally are buying stocks. This is virtual money. The stocks are garbage, bro. Like, this isn't even a physical asset. This is literally, I click 2 buttons and wow, I have equity in a company. Wow. What do I get to do with it? I get to stare at my portfolio and watch it go down because the bond rates are going crazy. Damn. I bet that doesn't affect your mortgage. I bet the bond rates don't affect your mortgage. I bet a Boeing plane crashing doesn't affect your mortgage. I bet a FDA review extension doesn't affect your mortgage. I bet a company getting fined billions or millions of dollars doesn't affect your mortgage or your real estate. I don't know why I keep saying mortgage, but for real though, if anything, like the mortgage is more valuable because you have debt and inflation is in your favor. You literally got given money to have an asset when your asset is going up in value. Like, it's like margin. It's better than margin. You don't know how the Dutch mortgage market works. It's not like the U.S. I mean, I'm sure you could still refi. I almost guarantee it. And if you can't, who cares? You still have a physical asset that's worth money. Doesn't matter. It's still a physical asset. It's better than any stock you're going to buy. At least you get to live in it. At least you get to literally do whatever you want with it. What do you get to do with your stocks? Like I said, you don't get to do anything with your stocks. You buy them and you watch them. You watch the numbers go up and down. You don't even get to, like, mow the lawn. like, like, you don't even get to go, like, you literally don't do anything. At least with the house, you get to do stuff. And you get enjoyment out of it. Or at least I would. If I was a homeowner, bro, I would fucking go love mowing my lawn. That would be amazing. It's not always possible to refinance. I don't know about that. I bet it's possible. You probably just haven't tried. Have you ever tried? Because don't tell me it's difficult if you haven't tried. That's all I'm saying. Morgan Stanley becomes the first U.S. bank to offer its wealthy clients access to Bitcoin funds. Is that real news? Morgan Stanley's kind of popping off that. I don't know if that's real news, though. It's starting to come through. I mean, and we have pretty strict rules in the U.S. Like, you have to have a job, or you have to have income, or I don't know. I've never done a refi. I don't know exactly what you need, but I guarantee if your house has enough equity in it, they're gonna let you refi. If I refinance, I get a new one, and you lose all tax benefits. How? You still have. You're literally just. You're literally just closing your previous mortgage and opening up a new one. Like, how do you lose your tax benefits? Nothing changes except the mortgage and the percentage, maybe. Like, I don't get how you lose your tax benefits. I don't know. That sounds sus. Like, because a refinance is literally just closing your current mortgage and opening a new one. And then you get the difference. At least that's how it works here. But I mean, like, I guess it could be different, but that's all a refi is. All the benefits disappear with that one. Yeah, who cares though? You're opening a new one. You're going to get the same benefits with a new mortgage. There's I keep seeing news that Powell's not even going to speak today. I don't know if that's real, though. You only get the benefits once? That sounds sus. I don't know. That doesn't make sense. Buy a new one? That sounds like an awful financial plan, but I don't know. Like, what tax benefits do you get that make that worth it? I don't know about that. Mohammed, this is my stream, bro. I mean, I'll talk about whatever I want. There's nothing even happening, so like if you want to go talk about penny stocks or whatever it is you want to talk about, then go to a different stream. But we're talking about investing long and creating wealth and real estate. So if you don't like that, if you don't want to be rich in 10, 20 years, then I'm sorry. You can go to a penny stock trading stream and chase your gains. That's good. That's good. That's on you, bro. But like I said, this is my stream. I'll talk about what I want to talk about. And if people have questions, I'll answer them. So, God bless you. can deduct the interest off the income tax. That doesn't make sense. Literally. Like, that doesn't make sense at all. Like, if you can do that off your first mortgage, you can probably do it off your second. But I guess I don't understand the European market. I just know how it works here. But that literally doesn't make any sense to me. So you're telling me a real estate investor in Europe, they buy one house for a rental property. They get the tax benefits off that one property. They buy a second property. They don't get tax benefits off the second property. Like that really doesn't make sense to me. I think you need to go review that. Maybe. I mean, I don't know. Obviously, like, you could know what you're talking about, and maybe I don't, but that just literally doesn't make sense to me. You might even pay more taxes. Jeez, your real estate market sucks. So what happens if you sell your house and you frickin' buy a new one? Like, do you, like, even if you sell your house and buy a new house, you're not going to get any benefits off the new mortgage? Like, you only get benefits off your first mortgage? Or that sounds fucking whack, bro. So before 2016 or 2015, whenever that happened, you were able to buy, like, what happens if you buy multiple houses? So, like, what if you buy a vacation house? Does your second house not, you don't get tax benefits off the second house? Before that, it was unlimited. Since you don't live there, but, like, you could say you lived there. That's weird. 6 months plus 1 day at least. So what if you lived in one house for a year, and then you went and bought another house and lived there for like a year? How would they even prove that you're living there? You could just have your mail be sent there. Your guys' market's confusing. One address at a time? Jeez, your real estate market sucks. I don't like the sound of that. What's your expectation about today? Where's the market going? We'll see when after Powell. We got to see what Powell says. The market's going to react as soon as after Powell's talks. You just got to wait. You need to go to City Hall and register, and when you do, you get signed out of your old address. That's crazy, bro. Bro, Europe sucks. I'm sorry. Europe sucks. I'm sorry, Matthew. I'm sorry, bro. But still, either way, I mean, even if you can only buy one house, like, real estate's still doper. Like, you could just literally, I don't know, like, I don't know anything about Europe real estate or anything like that. Obviously, this is all new to me, but I feel like you could probably just sell your house and move to like a cheaper area and just get a nicer house in a cheaper area. And it'd be like basically the same. I don't know. That's probably not a good idea, actually, but I still feel like real estate's better. Even if you can only get one house, you could just literally keep upgrading. Nothing to do with it. But I mean, realistically, like, what is your guys' interest rates on your mortgage? Like 4-5%? Is it really worth getting a 4-5% income tax deduction when you could just like, rent out a house? You would probably make more renting out your house than the 4-5% tax reduction. 2%? Yeah, 2%'s nothing. I mean, like we were talking about earlier, 2%'s a lot, but like you could probably make more just renting it out, I feel like. Oh, deductions 33. Okay. See, that makes more sense. Okay. I understand why you would want to stay in that house then. See, that makes more sense. When is he going to talk? I thought Powell was supposed to talk at 12:30, but I keep seeing news that he's not going to be talking today. I don't know if that's real. I need to look it up. Where is this? Why hasn't the Federal Reserve website been updated? Let's see. I think Powell might speak tomorrow. I think they rescheduled the meeting. I don't know, though. That's stupid if they rescheduled it. Yeah, I don't know if Powell's speaking anymore. Let's see, the rent, okay, maxed out at a point system, so if you want to set the rent at $1,200, it's tailed to a system and you get a max price. It's not a free market. Oh, excuse me. Up until €790 a month, heavy regulated. More free, but still maxed. You can even get fined if you charge too much in rent. Jeez. You cannot cancel the contract unless you pay it off, so lots of renters stay like 20 plus years in a house. I mean, that's good, but houses with renters lose value? That's weird. Your guys' real estate market's so weird. That sounds just awful. But I mean, like, I don't know. It's good that the only thing I liked about all of that is that, I mean, if your renters stay in your homes for a really long time, that's good. At least you don't have to worry about any bullshit. All right, so if you live in Europe, real estate maybe not the best, but I mean, if you're American, maybe even Canada, I don't know. I don't know. At this point, it seems like everywhere's got different rules, but real estate's dope. Mortgages limited. Yeah, come to the United States, bro. You need the United States. You can get a stimmy check. It'll be good for you. Just kidding. I don't know. But, like, that sounds whack. Dude, bond rates are going kind of crazy. Can you live off stimmy full time? Yeah, it's called unemployment. Unemployment, bro. Not a recommendation, not financial advice, but it's basically stimmy full time. Is it even enough? Right now, I don't know. Depends, I think. Go to the moon. Nah, don't do that. Don't do that. Well, if Pal's not live, that's whack. Who can really live off 1400? I mean, if you have a partner, I feel like it'd be doable. But by yourself, probably it'd be tight. It would definitely be tight if you were by yourself.
Regulatory structure. When we are dealing with individual investors using platforms like Robinhood to trade stocks and options and are relying on sites like Reddit for investment advice and ideas, is it simply because a platform is considered high tech that the traditional
Every
rules
time my
put in
wife leaves the
place
house, it
to
costs me 200 to
protect
300.
investors do not apply?
Oh shit! You need to
Absolutely not.
put a freeze on her credit card or something, or tell her to get a job. I mean, that might not go well, but
So I will say,
shit.
you make a very interesting point about the need for thinking about consumer protections, and I think a primary issue that we need to think about
Put a
are
freeze on her card, bro.
of these behavioral science techniques to encourage users to trade in a particular direction. And these are new. This is kind of cutting edge behavioral economics and behavioral finance, and we're just
I don't know. I don't
understanding the power.
have like
So I think that it is
a wife or
important to understand
anything like that. I don't really have to deal with that, but if I did, I'd put a handle on that real quick. I'd be like, bro, you need to go get a job, not use my credit card. I'm gonna freeze all my credit cards.
Isn't sufficient for it to mitigate the behavior of a particular user, and mistakes are made even
What the
when
hell?
it's a large dollar type of transaction.
She's a really good interior designer, but damn, 50 e-com sites?
From Florida, Mr.
Beast.
is now recognized for 5 minutes.
Use a beast, bro.
Thank you, Chairwoman Waters and
That's dope.
McHenry, for holding this hearing today. It's many of my colleagues said at our first hearing on GameStop,
I would definitely be freezing her card then.
efficiently allocates corporate capital investment.
She would try to go buy something, just keep getting denied. What is this?
For risk management today, to take the entrepreneurial risk
She'd come back home pissed as fuck. Like, I'm sorry.
our stock market
You need to chill.
with due credit to the financial regulation that followed the Great Depression.
You don't think you could live still Trump? Bro, you should have watched the Grammys.
Eventually lead to diminishing returns.
Oh my god.
We captured the big benefits
I was going through the like most viewed
with the exception of maintaining vigilance.
the popular feed on YouTube, bro. I didn't even know the Grammys happened recently. There's some funny stuff on there. There's some funny stuff.
The next round of regulation could have far fewer benefits than costs.
WAP is trash. I love WAP.
In trying not to
I love Cardi.
bottom line, Mr. POR
She my favorite.
project
Except I lost a little bit of respect for her during the Grammys. Oh my god. Oh.
Thank you, Congressman, for that question. This is just another example.
Yeah,
of
ClickFunnels is dope.
throughout my career.
I learned a lot about like
When anything happens,
ClickFunnels and stuff like that, but I never got into it.
or the trading activity here, or the volatility.
I just know about it.
Last March, is that to use your words, we need constant vigilance in terms of innovation in the markets, and so the FTC has those tools, and those tools are what's called retrospective review of existing rules. So
Way overplayed.
statutes that gave the SEC authority
I just love it
to
because
promulgate
it's just
rules
funny.
that work at a particular time for a particular
Like if you actually listen to the lyrics,
and as market
it's funny as fuck.
technologies change, as innovators innovate,
What that wet. Oh, I had a freaking desktop audio on that whole time. Whoops, sorry. My bad. I was just listening to the GameStop hearing. I didn't even know I had the desktop audio on. My bad. My bad. I just wanted to see Roaring Kitty. CNBC Netherlands. What is this? Go to polls amid strict and unpopular COVID lockdown. I'm not sure. I keep seeing mixed news. Like some people keep saying that Powell canceled the meeting or they rescheduled it for tomorrow. Some people keep saying it's on, so I guess in like 3 hours we'll find out. Nah, it's at 12:30 my time, or it was supposed to be at 12:30 my time. He's not gonna crash the stocks. Like I said, he's gonna bring confidence into the market, and then whatever happens after that is what was already gonna happen. Why am I reading this? So who do you want to win the election in your country, Matthew? Volkswagen. That's funny. I'm gonna post this. I think that's funny. Whoops. Wait at wet. Disneyland in California to reopen on April 29th. Disneyland Park to open April 30th. Gives him. Our president is always on his bike to work. It's because he's a boss. It's pretty damn similar to America, though, except we got, instead of bikes, we got, like, the squad rolls up in all the black GMCs. The full-on squadron. I think that's funny. He just rides his bike like a normal person, though. Get a Stream Deck. I don't think I really need a Stream Deck, though. I don't do anything that would require hotkeys. You can find them at local shops and malls doing groceries. That's hilarious. That's funny, though. Oh, Europe. I know, for real. I'd love to have some coffee with, like, Obama. Or maybe even Biden. I mean, maybe even Biden would be fun to hang out with. I don't know. Probably not, but, like, I think it'd be alright to, have a coffee, I guess. Just say what's up instead of getting, like, frisked the second I see him. Be like, what's up, Papa Biden? How you doing today? Like, come on. Waiting too goddamn long in these lines. I'm the president. I should be able to just get my coffee before everyone else. This is bullshit. Come on. They won't even give me 2 sugars without charging me extra. I'm like, I'm the president. Why do you gotta charge me extra for 2 sugars? Come on. Oh, the Biden voice kind of hurts my throat. Abe Simpson? What? Abe Simpson? Like, Abe Simpson? Who is that? Isn't that from The Simpsons? Oh, the grandpa? I didn't know his name was Abe. That's funny. I haven't watched Simpsons in so long. Ugh. Copper lumber moving up. I was watching the bond yields. The bond yields are still going up kind of crazy. It's a little sketch. Ugh. 20 spam calls a day. I always get spam calls, but I just don't answer my phone. I had my phone silenced for like 2 months. Nobody could get a hold of me. It was kind of fun. I loved it. Robo blocker. Jerome speaking today. Didn't you already ask? I don't know. Like I said, I keep getting news that says he's not speaking, and then I get news that says he is. So I really don't know. At 12:30, we'll find out though. Sorry, I was typing to someone. Oh. I like how we went straight ranting on the long term in real estate for like an hour, and now I'm just like not even talking. Are you a Republican? I'm neither. I'm Corey. That's me. I don't. I would never put myself in a class because that's weird. I don't care who controls the government. They're all whack, honestly. I'm the president of the United States. That's me. Ah, come on. I just gave you $1,400 in stimulus, and you're asking me if I'm a Republican? Ah, come on. Nah, but really, I don't give a shit. Politics is whack. that's a lie. I enjoy politics a lot, but I just don't care about either side. They both have their pros and cons. So, I mean, realistically, fuck all of them, but like yeah. That's all I'm going to say. Trump was funnier in the media. Yeah, Trump was funnier for sure. Joe is too old. That's what everyone says. But I mean, realistically, you have to be 55 plus to be a president. So who's to say what's too old? Right? 55? Pretty sure that's the age limit. Pretty sure. $35? I thought it was older than that. The Canadian knows more about it than I do. Oh, it is 35. Why did I think it was 55? I don't know. Really don't know why I thought that. Plus minimum crazy level? Nah. I don't think there is a minimum crazy level. I don't think there's a scale on that. They just either break it or don't. But most of the time they're breaking it. Looks like Olo just IPO'd. Opened at $31. Their original price was like 25, I think, or 22. So a little bit of a premium on there. I don't know what their share float was though. I didn't look at that. Nah, I'm not buying Olo. It's actually a decent company from what I read about it, but I'm not messing with IPOs. I'm good on that. We can watch it. That'll be fun. See what happens. I'm going to find out what the share float was so I can tell you guys. Let's see. We got 18 million shares. That's nothing, literally. This thing might be interesting to watch. Might move. I don't know. 18 million. It's already traded almost 3. Creating new bag holders. Nah, be careful, bro. Like, we literally just had an hour rant on IPOs and fucking penny stocks. Like, that wasn't for nothing. I hope someone listened to that. I want to see you guys do good. That's all. End of story. Kitty, do you like your packing paper bed, you weirdo? Here to watch the YOLO plays. Well, it's not time for YOLOs. It's not how you create wealth. We need volatility. We could buy more shares of Zillow. I'm just kidding. I'm not doing that. Might schlep a weekly. I just want to see more volatility on the market before we make trades. Making trades when the market's tight it's tough, man, especially on options. Lunchtime. In the eastern part of the U.S., it's lunchtime, but it's still early where I'm at. Have I ever been to New York? Nah. I kind of want to go to New York, but at the same time, I think it would be kind of nuts. Like I like the city, but New York is insane. I just want to go to Vegas, stay in a nice suite, and gamble. That's what I want to do. I miss Vegas. I need to hit up my boys, bro. I got a crew that we like to go to Vegas. Well, we haven't been in like multiple years, but the OG Vegas crew. Why we're at Vegas? I just like playing blackjack and craps, really. That's all. I don't even drink. But I don't know. I like the Vegas vibe too. It's just a good vibe. Ooh, we got one dislike on the video. Let's go, baby. That's what I'm talking about. That's what I'm talking about. God bless you. Whoever disliked the video, we love you. It's on my screen. I can't play blackjack on the stock market, though. Or craps. I mean, I can kind of play blackjack. I mean, the odds are more 50-50, but I can't play craps. I don't know. I like staying in hotels, too, for some reason. Like, it's fun. Especially if you're actually in a nice hotel. Like, shitty hotels, not a big fan of, but, like, nice suites. I love it. And yeah, just like the night vibe in Vegas is tight, bro. It's way tight. Lots of walking though. Next time I'm bringing a skateboard. I'm skating the whole time. Too much walking last time. Or a bike. The hotel's lost the magic. Yeah, that sucks then. I like nice hotels though. Like the next vacation I'm going on, bro, I'm staying in a fucking suite. I don't care. I don't care if it costs like multiple hundreds of dollars more. Like I want to stay in a nice hotel with a balcony where I can overview the city, you know? Smoke a joint. Just kidding. Kind of. Weed's expensive in Nevada though, so I don't know. Hotels in Italy are nice. I've never been to Italy. I think it'd be dope to take a Euro trip. Or Cali. I would enjoy California too again. I haven't been there in a long time. I just want to go sit on the beach. I love the beach, bro. I don't like the water. I don't like sharks, but I just love the beach. Like at nighttime, go watch the sunset on the beach. Woo! Man, I love it. Marble everywhere. That sounds nice. Ocean's 12. I've never watched that. You know me, Matthew. I don't watch movies or shows. I don't know what Ocean's 12 is. I forgot you lack culture. Yeah, I live under a rock, bro. Why do you think I stream for 6 hours a day? I feel old. Why? Why do you feel old? Dude, they're still going on with this GameStop hearing? That's crazy. Lake Como. Let's check it. I want to go fishing there. That'd be dope. Damn, bro. That looks beautiful as fuck. Oh my god, I'd want to stay on that freaking hotel right on the water, bro. Oh. Oh. Cuz I got Matthew's reference. Nah, you shouldn't feel old. I just legitimately don't watch movies. I mean, if it's a movie. Like, I don't even know what it is. But, bro, Lake Como, bro. Wow. This looks so dope. Does anyone want to go to Lake Como with me? This looks beautiful. Wow. Wow. Bro. Damn. That looks sick. Tesla operating an autopilot hits police car in Michigan, officials say. I thought that's happened already before, but I guess it just happened again. Oh, there's a repost of that Disneyland news. Disneyland to open April 30th at 15% capacity to California residents only. That's weird. George Clooney has a villa there. Well, I'm gonna hit up George. I got his number. No, I'm just kidding. Could you imagine? I was like, "Yo, George." I just call him up right now on stream. Yo, can me in the chat come hang out at your crib? It's programmed to hit police cars. That'd be funny. I mean, not really, but like, that'd be weird. You know what might be a good play is Delta. Delta's kind of lagging behind everything else. Bond yields are coming up again. Yeah, Delta is just kind of lagging behind, it seems like. I mean, it's more of a global airline, so it makes sense, but FedEx is popping. FedEx has earnings after hours. Or no, never mind. FedEx's earnings is tomorrow. Dollar General has earnings in the morning tomorrow. FedEx is after hours tomorrow. I think, doesn't Nike have earnings too? I think Nike has earnings as well. I don't know if I want to play an earnings play though. Yeah, Nike's tomorrow after hours. Oh, Sundial has earnings after hours today. That could be interesting. I mean, I wouldn't play it, but it's just going to be interesting to see how it reacts off earnings, especially with how much it's up already. Kind of like this April 1st Delta play, but I don't think I'm going to play it. Very slow at the morning. Yeah, they're super slow right now. Very, very tight here. Intel's going up. Intel's like the only tech stock I've seen on the high ticker. Did Intel have news? No, no news on Intel. Coupon coming down. More lows. Por coupon. Damn, Intel's really popping. I don't see any news on there. Intel takes shot at Apple in new commercial. Interesting. It's a weird reason for the stock to be popping if that's why it's going up. Let's look at this daily. Just an hour ago. I don't know. I just happened to see it on the high ticker and looked up the news on Twitter. It just looks like that's the only thing I could see. And the new processor they released. AMD's going kind of crazy though. Or Intel, not AMD. AMD's not even moving. Dude, Intel's going nuts. Thoughts on NOK? I don't really like NOK, but a lot of people like it for the future outlook. Dude, Intel is going crazy. Jeez. Some of these contracts went nuts, bro. Damn, you could have picked up these 68.5s for literally like 4 cents. They're already up almost 1,000%. That's nuts. Product release for Intel is yesterday. I think they just released it. I think they're moving off that ad they posted. Or they're having a like a shareholder meeting or something, or a product release meeting. I was gonna sell a credit spread on there, but the spreads were nuts. Like, I don't even know if I would have got filled on any of them. I could try, I guess. Probably not a good idea, but let's see if it fills me. Yeah, it's not gonna fill at the price I want. I should have did it on the top there. Oh, yeah. That's the NFT stuff? Really? What? Really? I never knew that. That would have actually been a decent trade, or a decent, like, hype trade. I didn't know that's what it was. We've been seeing that on the high ticker for the past, like, what, week? Maybe last week? I don't remember. We've been seeing that a lot, though. I didn't know what it was. Or else that would have probably been an interesting trade, because NFTs are just super hyped up right now. But too late now. It's too late to apologize. It's too late. Don't trade hype. I mean, I also said you could trade hype. You just got to go small. Like, if I would have known that was like an NFT thing, I would have probably been down to put like 50, $100 on there. Would have been decent. Just because of the times we're in right now, NFTs are way hyped up. But too late now. Unless we can find another like publicly traded NFT thing, but I mean, who says it's going to work twice? It's too late to apologize. It's too late. U.S. Senate votes 98-0 to confirm Catherine Tse, I don't know how to say that name, as U.S. Trade Rep. Intel CEO to provide business update March 23rd. TCAT just got halted. OCG. Powell's in 1.5 hours. 2 hours. We haven't done push-ups all day, though. We're slacking. Oh, kitty, you in your box. We need to do push-ups. I don't know if I want to buy this one, though. OCG is actually a little bit better than TCAT, but I don't really know what either of these are. Could get pump and dumps pretty easily. We'll wait. Maybe if we can get a pullback on some of those, they might be good. But for now, we be very, very patient there. I'm not trying to pay 200% premium. The FOMO premium. Nah, I'm good. No FOMO. No FOMO. No FOMO YOLO. How many people are in here right now? Let's see. Let's have a look. We got 20 people in here right now. Can you guys hit that like button? We only got 13 likes. Can we hit that like button? V6 Kong, I appreciate you being here, bro, but this isn't the place to tell people what to buy. If you want to post your play and tell us what you got on the options or how many shares you bought, that's cool, bro, but you don't need to tell other people what to buy. So God bless you. I appreciate you, bro, but post your play. Post the play. You gotta be posting that Twitter news, Matthew. Why aren't you watching Twitter? 5,000 shares at 103.46. So there you go. Why are you telling people to buy that then? Oh, never mind. I thought Peloton was trading at 110. So never mind. You're good, bro. Thank you for posting your play. I was like, I really thought Peloton was trading at 110. I'm like, bro, why are you telling people to buy it when you bought it for like $7 cheaper? Like, what is this? What is this? Do a quick power nap. All right, bro. God bless you. Enjoy your nap. I'm jealous. I want a nap. I want a sleepy sleep. What time is the conference? It starts in like 2 hours. Well, it's supposed to start in 2 hours. But there was news earlier that they were rescheduling it, so it should be on in 2 hours, but I really don't know for sure. What's the best option to play right now? Patience. Why is my mic so low? Because you probably need to turn the volume up on your computer. Maybe. I don't know. It's decently low, but if I turn it up any higher, the hissing will be kind of disgusting. So I got to keep it at this level. Then it's not like super bad. I need to get a new audio interface. I tried to buy buy one. I bought it a Focusrite Solo, but bro, the hissing on that is ugh. That was gross. So yeah, I don't know. I need to find a good audio interface. Do you guys have any recommendations? Because it seems like all the USB ones are garbage. Riot's coming up. Is Bitcoin ripping or something? Nah, Bitcoin's not really ripping. Your opinion on plug power? We'll look at it. I mean, it's decent, but I just don't like that it used to literally be worth like $5 a year ago. That's the only thing I don't like. Gotta be careful with stocks like that. You don't know what's gonna happen. But plug power is decent. I just don't know too much about it. $20 by May. I mean, did you make that play? Like I said before, bro. Like, post the play. Like, if you're just making an assumption, then it's not worth it. But if you made a play on it, post it. Asus number 1. Does Asus even have audio interface? The Asus Zonar? What I think about Neo? Same concept with Neo. Used to literally be a $2 stock, so you just got to be careful with it. I don't even need to look at the chart because people ask me about Neo all the time, and I'll give them the same answer. Like, You guys have never driven a Neo car. You've never seen a Neo car. Like, you don't even know if it actually exists. You guys just know the stock's there and it's gone up a lot. So you're investing in pure speculation. So just know the risk of what you're putting your money into. And don't go too big, because you could get disappointed. But if it hits, that's dope. I really shouldn't be telling you guys what my opinions are on stocks. Like, someone's going to get mad. It's what happens every single time. I start giving you guys my opinions about stocks. It doesn't match up with your opinion on it, and then someone gets mad. But I'll do this last one. ADA. ADA is not a stock, so God bless you. It's crypto. Yeah, I don't mess with crypto. The only crypto I like is Bitcoin. Everything else is meh. We'll see what happens. But nah, I don't mess with crypto. You explain what this Powell speech is about and why it's affecting the market. I mean, it's not really affecting the market. It will once the speech goes on, but it's just people are expecting him to talk about inflation, and I think people have a higher expectation for inflation than what it actually is. So people get worried about that, even though over time inflation would make stocks go up. In the short term, though, it scares investors for whatever reason. I mean, I don't really understand that part too much. It's really macroeconomics, so it's kind of weird. But and the bond rates. If inflation is that crazy, you're gonna see more people rotating in bonds as they get scared, and then the bond rates are gonna go back up. But he's also gonna talk about unemployment, because that's the Federal Reserve's main focus right now is unemployment. They want to fix that. And it's just an overall economic speech. It just gives people a good indicator of the economy. And I really don't know why, but investors just have a lot of, what's the word? Confidence? I don't know if it would be confidence, but they just literally worship what Powell says. So if he says something wrong that investors don't like, you're going to see the market make a move. Where at the same time, if he says something that investors like, you're going to see the market make a move. It's just a weird event that investors look forward to. But realistically, like, they say the same shit every single time, so I don't understand it too much why it affects the market, but it does. Because I almost guarantee they're literally going to say the same exact thing they say every time. They're going to say inflation moderately above 2% or at 2% is the goal. They want unemployment at what? I forgot what they want employment at. They just want to bring unemployment back to normal levels, because I think unemployment's like, I don't know the exact numbers. I think it's like 20 to 10%, so they want to bring it back down to like 3. I really don't know the exact numbers, though, off the top of my head. That's just a guess. But, yeah. It's just a weird event that the market takes a lot of weight into for whatever reason. it's just weird. It's weird to me because literally they usually post what they're going to talk about before they even have the speeches. So it's really weird to me. Maybe a lot of people don't look into economic data the way, I mean, I don't even look into it that much anymore, but maybe a lot of people don't take the time out of their day to look into economic data and understand what's really going on. But or I guess a lot of the economic data is kind of lagging too. It's not fully up to date. So Powell in a way is your like up to date economic data. But at the same time, they literally post the stuff that they're going to talk about before he even talks about it. So it's weird. I already repeated that, I think, but there's a lot that goes into it. That directly affects the yields. Oh yeah, they will talk about that too. How much they're if they're going to continue to buy treasuries or not. I don't think they're going to touch the federal fund rate though. Or the short-term lending rate. They're not going to touch any of that stuff, I don't think. They might talk about it, but for the most part, I'm really not expecting anything. So you might see the market clap just because they might have a higher expectation for Powell than what is actually going to happen. I don't know. It's weird. Powell's a weird event in the market for sure. If the interest rate goes up, the market will clap. That's not necessarily true. But, I mean, kind of. But they're not going to touch the interest rate, so. If the SLR isn't extended, the banks sell off their treasuries, spiking the yield. Yeah, that makes sense. See, I was gonna ask you why you're looking at that, but that makes 100% sense, because that's how they're keeping the bond market stable, is by buying treasuries. Because if there's too many sellers, the rates are just gonna go crazy. Or wait. Wouldn't, if the Fed wasn't buying treasuries, that would make I feel like that would make the rates go down, or the yields go down. No, I don't know. Because if there was more buyers in the market, then the yields would go up. But if there's more sellers than buyers, wouldn't the yields go down, because there's going to be more competition for higher rates or higher yields, I guess. I don't know, that's weird. The bond market's weird. We had like a full lesson on this one day, but I completely forgot what I even talked about. Or no, wait. I don't know. I'm confusing myself now. The bond market's trippy. See, that's hurting my brain, because bonds decreasing in value equals higher yield. Yeah. Oh, okay. Yeah, that makes sense then. Because yeah. Okay. See, I was confused for a second. So yeah, if there was a big spike in selling, that means the bond's value would decrease. That okay, I gotcha. I gotcha. See, I don't know why. I always get confused on that. That makes sense though. The bond's just crazy because it's like the bonds don't have a set price, but they have a set uh percentage of what the bond actually gives you with whatever money you put in. I believe. I don't think bond yields have an actual price. It's just a percentage of what you're gonna get on your return. So like, I don't know. They're weird. But that makes sense because if there was a bunch of sellers, they would be having to fight for competition and sell their bonds at a lower I guess value. Well, no, that's weird though. Cuz bonds don't really have a price, do they? I thought they were just percentages. I thought you could literally put any amount of money into a bond. That's I don't know. I'm confusing myself now. I'm really confusing myself. Buyers might step in, yeah. Let's see. I don't think bond yields have a price. Oh, they do have a price. I think. I need to look at another website to make sure this is correct. I think it's the coupon rate. Isn't that the price? Pretty sure that's what it is. Coupon rate. A coupon payment on a bond is the annual interest payment that the bondholder receives from the bond's issued date until it matures. Coupons are normally described in terms of the coupon rate, which is calculated by adding the sum of coupons paid per year and dividing it by the bond's face value. So bonds do have a value. I just don't know. Where do you get that? Futures? They have bond futures? /ZB. Ah. My man. Look at this guy. Schleppy. I love you, bro. I love you. See, this makes 100% more sense. But these are like... Yeah, there'll be a time to play TLT, though. I mean, realistically, it's not down that much, but I'm sure the options were really cheap. Oh, actually, it's down a lot. Never mind. Let's see. So the price and interest rate of a bond are determined at auction. The price may be greater than, less than, or equal to the bond's par amount or face value. See rates in recent auction. Those aren't the ones I want to look at. The price of a fixed rate security depends on its yield to maturity and the interest rate. If the yield to maturity is greater than the interest rate, the price will be less than par value. If the yield to maturity is equal to the interest rate, the price will equal to the par. If the year to the maturity is less than the interest rate, the price will be greater than the par. See, I'm just confused where they get the price, because all that makes sense. Sometimes when you buy a bond, you are charged accrued interest, which is the interest the security earned in the current semi-annual interest period before you took possession of the security. If you are charged accrued interest, we pay it back to you as part of your next semi-annual interest payment. For example, you buy a 30-plus bond issued February 15th through 2006, the maturing February 15th, 2036. February 15th, 2006 fell on a Saturday. Treasury would issue the bond on the next business day, Monday, February 17th, 2006. Besides the purchase price, you would pay Treasury for the interest accrued from February 15th to 17th. When you get the first semi-annual interest payment, it will include accrued interest you paid. See, I'm so confused. Oh. Ding. I think a light bulb just went off, maybe. You hold a bond until it matures or sell it before. If you don't sell, your options or maturity depend on where you hold your bond. See, I'm learning about bonds, I guess, today. Because I'm confused. Like, I understand it, but I'm just confused where they get the price from. But I guess it could just be the futures. But I don't feel like you would have to put like 15 grand into a bond. Like I literally have bonds that someone gave to me, or I think it was like my grandma or my great grandma, something like that. Literally like a $50 bond. So it's not like you have to buy that much of it. So I'm just getting kind of confused. We're learning though. You buy a bond that pays 1% interest for years. That's exactly what you'll get. And when the bond matures, its face value will be returned to you. Its value at any time in between is of no interest to you unless you want to sell it. It's important to understand movements of bonds. You'll get a 7-cent. You purchase the a bond's price consists of a handle or the whole number part of the price quote. In the 2-year treasury, for example, that's 99. It's I don't know how to say that word, called the big number. The 2-year treasury handle is 99 and the 30 seconds are the 29. The 30 seconds? That's weird. We must convert those values into a percentage to determine the dollar amount we will pay for the bond. To do so, we first divide 29 by 32. This equals 0.90625. We then add that amount to 99, the handle, which equals 99.90625. So 99 to 29 equals 99.90625 of the par value of the 100,000, which equals 99,906.25. That is confusing, bro. But I'm starting to understand it, but it's so confusing. Jeez. Bonds are complicated, bro. Like really complicated. All right, so calculating a bond's dollar price. A bond's dollar price represents a percentage of the bond's principal balance, otherwise known as the par value. A bond is simply a loan, after all, and the principal balance or par value is the loan amount. So if a bond is quoted at 99 to 29 and you were to buy a $100,000 2-year treasury bond, you would pay 99,906. Okay, that makes sense. Bond yields the discount rate that links bond's cash flow to its current dollar price. Dude, bonds are crazy. I didn't know they like went this deep. I'm starting to dive into the fucking bond rabbit hole right now. I'm not even paying attention to the market, so if you guys see any news or anything like that, feel free to post it. But I mean, it's pretty slow right now. Let's see. A bond's yield is the discount rate that links the bond's cash flow to its current dollar price. Oh, this is key takeaways. All right, for sure, Schleppy. Appreciate you being here, bro. God bless you. When inflation is expected to increase, interest rates increase, as does the discount rate used to calculate the bond's price increases. That makes the bond's price drop. The opposite will occur when inflation is expected to fall. Two-year Treasury is trading at a discount, which means that it is trading at less than its par value. If it were trading at par, its price would be 100. If it were trading at a premium, its price would be greater than 100. Okay, that makes sense. To understand discount versus premium pricing, remember that when you buy a bond, you buy for the coupon payment. Different bonds make their coupon payments at different frequencies. Coupon payments are made in arrears? What the fuck is this? Arrears? I don't know how to say that. Is a financial and legal term that refers to the status of payments in relation to their due date. Okay. When you buy a bond, you are entitled to the percentage of the coupon that is due from the date that the trade settles until the next coupon payment date. The previous owner of the bond is entitled to the percentage of that coupon payment from the last payment date to trade settlement date. Dude, bonds are... Dude, this is weird. This is crazy. I'm like barely grasping what I'm even reading. Because you'll be the holder of record when the actual coupon payment is made and will receive the full coupon payment, you must pay the previous owner his or her percentage of that coupon payment at the time of the trade settlement. In other words, the actual trade settlement amount consists of the purchase price plus accrued interest. When would someone pay more than a bond par value? The answer is simple: when the coupon rate on the bond is higher than the current market interest rate. That makes sense. In other words, the investor will receive interest payments from a premium priced bond that are greater than could be found in the current market environment. Same holds true for bonds priced at discount prices. They are priced at a discount because the coupon rate on the bond is below the current market rates. Coupon payments. Coupon. Yields tell all. Almost. A yield relates a bond's dollar price to its cash flow. A bond's cash flow consists of coupon payment and return on principal. The principal is returned at the end of the bond's term, known as its maturity date. Important. Bond prices and bond yields are excellent indicators of the economy as a whole and of inflation in particular. Is there people actually listening to me right now? Damn, there's 18 people in here listening to me read about bonds. God bless you guys. Make sure you hit that like button if you have not. You could also hit that dislike button if you want. It seems like people like to do that for some reason. They come in here expecting Jerome Powell when he's not even on. I don't know. Anyway, a bond's yield is the discount rate that can be used to make the present value of all of the bond's cash flow equal to its price. In other words, a bond's price is the sum of the present value of each cash flow. Each cash flow is present valued using the same discount factor. This discount factor is the yield. I'm a truck driver. I'm picking up a trailer listening to you. Hell yeah, bro. Let's go, baby. Let's go. That's what I'm talking about. Grinding at work. My man. Hell yeah. That's dope. Let's go. That's dope. I need to reread this part. So a bond's yield is the discount rate that can be used to make the present value of the bond's cash flow equal to its price. Bond's yield is the discount rate that can be used to make the present value of all the bond's cash flow equal to its price. It kind of makes sense, but kind of weird. Present value is the current value of a future sum of money or stream of cash flow given a specified rate of return. Future cash flows are discounted at the discount rate, and the higher the discount rate, the lower the present value of the future cash flow. Determining the appropriate discount rate is the key to properly valuing future cash flows, whether they be earnings or debt obligations. Dude, this is too much. This is hard. We need to go through this again one day. I remember testing on bonds and the bond market being the boringest part of my econ class. I don't know. I'm kind of having fun reading about this. Like, this is way more difficult than stocks. Like, stocks are easy, bro. This is actually, like, kind of complicated. Maybe I need to go take an econ class. Shit. I need to do some push-ups, too. I forgot again, but I'm going to finish reading this, and then we're going to do some push-ups. Intuitively, discount and premium pricing makes sense because the coupon payments on a bond priced at a discount are smaller than on a bond priced at a premium. Well, no duh. If we use the same discount rate to price each bond, the bond with a smaller coupon payments will have a smaller present value. Its price will be lower. Yeah. In reality, there are several different yield calculations for different kinds of bonds. For example, calculating the yield on a callable bond is difficult because at the date at which the bond might be called is unknown. The total coupon payment is unknown. What's a callable bond? I've never heard of this. Callable bond, also known as a redeemable bond, is a bond that the issuer may redeem before it reaches the stated maturity date. Papa Pal in an hour? I think it's an hour and a half. I think he starts at 12:30. Callable bond allows the issuing company to pay off their debts early. Call their bond if market interest rates move lower. Dude, that bonds go deep, bro. You could literally go into like the biggest rabbit hole just researching bonds. This is crazy. Dude, Volkswagen's still going up. I think Volkswagen might be a short squeeze, bro. Low key, like the volume on that is fucked. And they did short squeeze this in what, 2008? No, there's no way. It's 2 billion shares. I don't know. That's sus, bro. Volkswagen's going crazy. Yeah, we already read that part. Volkswagen's nuts, though. Let's see. Where were we at? Oh, yeah, callable bond. Okay, so, however, for non-callable bonds such as U.S. Treasury bonds, the yield calculation used is a yield to maturity. In other words, the exact maturity date is known and the yield can be calculated with near certainty. But even yield to maturity has its flaws. A yield to maturity calculation assumes that all the coupon payments are reinvested at the yield of maturity rate. This is highly unlikely because future rates can't be predicted. Why a bond yield moves inversely to its price. Dude, Volkswagen's nuts. So it's starting to make sense. Like I get how the pricing works now, kind of. I'd probably have to reread it another time, but it's kind of starting to make sense. But there's a lot. There is a lot. You could dive into the rabbit hole. wonder what happened to that OLO. It's almost traded half the float. I don't want to watch Volkswagen. This is insane right now. Okay. So a bond's yield is the discount rate or factor that equates the bond's cash flow to its current dollar price. So what is the appropriate discount rate, or conversely, what is the appropriate price? When inflation expectations rise, interest rates rise, so the discount rate used to calculate the bond's price increases and the bond's price falls. The opposite would occur when, we already read that. Inflation expectations is the primary variable that influences the discount rate investors use to calculate a bond's price. But as you can see in Figure 1, each Treasury bond has a different yield, and the longer the maturity, the higher the yield. That's because the longer a bond's term to maturity is, the greater the risk it is that there could be future increases in inflation. That determines the current discount rate that is required to calculate the bond's price. The credit quality, or the likelihood that a bond issuer will default, is also considered when determining the appropriate discount rate. The lower the credit quality, the higher the yield, and the lower the price. All right, we got like 2 more paragraphs of this, I think. Yeah. Bond prices and the economy. Inflation is a bond's worst enemy. When inflation expectations rise, interest rates rise, bond yields rise, and bond prices fall. That's why bond prices/yields, or the prices/yields of bonds with different maturities, are an excellent predictor of of future economic activity. To see markets' prediction of the future economic activity, all you have to do is look at the yield curve. The yield curve predicts a slight economic slowdown and a slight drop in interest rates between months 6 and 24. After month 24, the yield curve is telling us that the economy should grow at a normal pace. Yield curve's kind of interesting. I know a little bit about that. You guys need to look into the yield curve on your own whenever you have time. I think the trading fraternity has a really good video on it. That's where I learned about the yield curve from. Why it matters. Understanding bond yields is key to understanding expected future economic activity and interest rates. That helps inform everything from stock selection to deciding when to refinance a mortgage. Use the yield curve as an indication of potential economic conditions to come. That is it. I'm still kind of confused on the price of the bonds, but it makes sense. You just have to understand that handle in the 30 seconds, I think. If that's what they call it. I need to look up what that is, because that's the only thing I don't understand so far. Let's see. Corporate bonds are quoted in 1/8 increments, while government bonds are typically quoted in 30 seconds. Municipal bonds may be quoted on a dollar basis or on a yield to maturity basis. There's 3 different ways that you will see bond prices quoted. Bonds are generally quoted as percentage of face value. $1,000, for example. A bond selling at $9.50 would be selling at 95% of its face value and would therefore be quoted at $95. By their yield, the 2-year U.S. Treasury jumped 10 basis points to 2.12% yield. What the heck does this mean? Whoever wrote this is funny. So 2-year Treasury describes the bond being traded. Jump 10 basis points with bonds. Wait. So 2-year Treasury describes the bond being traded. Jump 10 basis points with bond price and yield have an inverse relationship. So an increase in yield means the price of the bond dropped. Okay, that makes sense. But 2.515 yield. The 2.15 yield is the yield to maturity based on the current market price. By talking about yield instead of price, it's easier to compare different bonds. Interesting. Like, I kind of get it, but the actual like pricing of bonds is interesting. Very interesting. I legitimately didn't even know bonds had like an actual pricing. I thought it was literally just the yield and the coupon rate. Oh, I feel like this makes it pretty easy. What is a bond quote? A bond quote is the price at which the bond is trading. It's usually expressed as a percentage of par value. The price that someone is willing to pay for the bond is given in relation to 100, or par value. A bond quote above that means the price is trading above par, vice versa, the bond quote below 100. So you would have to find the par value, which we learned how to get that. See, now I want to look up 20-year Treasury bond par value. I mean, I guess you don't really need it. Wait. So if I think I don't know, this is kind of just a weird like thing I just made up in my head. So if the yield is at like 2%, that means the par value, I mean the original par value of any bond should be 100. So if you put $1,000 in and it was at 100, that means you would be paying $100 or $1,000 for the bond. So if the yield was at 2%, but like in that case, that means you would be getting 0 in yield. I'm pretty sure. I'm literally just making this up. I don't know if this is how it works, so bear with me. So if you buy a bond at 2%, that means the par value would be 98, I think. So that would maybe, I don't know. That kind of makes sense in my head, just because of like that last thing we read, where it added the handle to whatever it divided. I really don't remember. I'd have to go through and reread that again. But that's kind of what I'm understanding. But I don't know if that's right. No, that's not right. There's no way that's right. The pricing's complicated, dude. Like, I kind of get it, but it's just really weird. Like, we just read about it, but you have to know the handle and the 30-second. I don't know. I need to do push-ups, though. So, ladies and gentlemen, dude, Volkswagen is going insane, bro. That was at $40 last time I looked. What the fuck is this? I think Volkswagen might be a short squeeze, low-key. Like, I don't want to trade it, obviously, for obvious reasons, but just look at that thing, dude. I'm almost 100% sure this is a short squeeze right now. But, ladies and gentlemen, we've been sitting here for like 4 hours almost. We've got about 2.5 hours left, a little over 2.5 hours. We're getting kind of early on this, but we've missed a bunch of push-ups, so it is that time where you got to stand up out of your chair, stretch a little bit, walk around, and get some form of exercise, get the blood pumping. We still got a lot of time here in the market. We got Jerome Powell coming up. So you guys are going to want to get some form of exercise. It'll be good for you. So run it, baby. Run it. Light work. It's light work. I hope you guys enjoyed that reading of the bonds. Hopefully you learned something. I kind of learned, but I feel like I would have to go back and reread it a couple times because that was kind of complicated. I'm not going to lie. The bonds go a lot deeper than what I thought. There's definitely a lot more to it. This market. Be careful shorting that, bro. I don't know if it's an actual short squeeze or not, but that volume on it is insane. This is one I wanted to look up. So what is a handle? A handle is the whole number part of a price quote. That is, the portion of the quote to the left of the decimal point. Oh, excuse me. For example, the price quote for the stock is 56.25. The handle is 56, eliminating the value of cents in the quote. Handles are often used in futures and equity markets, where they are also known as the big figure. Okay, that makes sense. Oh, okay. That makes sense. See, what had me confused on this thing I was reading is they didn't have a decimal between the 99 and the 29. It was like a dash mark instead. So it didn't even look like a percentage thing. So that kind of confused me. So that makes sense. Where'd they get the 29? Oh, yeah, that. .99% of par value of 100. Yeah. So trippy, bro. Wait, are those the yields? .82. No, that's not the yield. So complicating, bro. This website makes it complicating. I need to find another good website that describes it the way that website did. Because all of that stuff makes sense, but like some of the figures they showed, it makes it so confusing. Dude, you literally could just spend hours researching about bonds. There is a lot. That's crazy, bro. Expedia's killing it right now. Where's TripAdvisor? Damn, TripAdvisor's almost at 60. Oh, it got to over 60. Damn. Expedia's killer, though. All right, I'm done reading about bonds for the day, though. I appreciate everyone who listened to me get all confused about bonds. It was fun. But I'm done. I'm done with that now. I need to find like a good book about it. Dude, they're still running this GameStop hearing? Oh, it's that angry girl. New punch buggy. For real though. I don't know why it would be going up like that, especially with like no other automotive stocks following it. It's so weird. That volume's just what sketches me out, like cuz Volkswagen has been short squeezed in the past before. That volume's just insane, but it's like it's a 2 billion share float company, so it shouldn't be reacting like this. But you haven't seen volume like that. I mean, it doesn't show you the full history of Volkswagen, at least on E-Trade. I don't know if it would show it on TD Ameritrade. Yeah, you don't even get the full history of Volkswagen. They like clapped it. But you've never seen volume like this. Did they have it says they have earnings though. I don't know if that would be why. I don't even think they reported. It's very weird. What was I gonna look up? Oh yeah. One more thing about bonds. Being the new Tesla. Ah. Oh yeah, and I was gonna check if they had earnings. Volkswagen's actually pretty decent though. Like they have the e-Golf. I'm pretty sure they have other e-cars. Like the e-Golf is one of the first electric cars I saw in person, besides maybe like the Leaf or something like that. Six new factories. Ah. bought Ruby higher than it is now since it dipped, what should I do? I mean, if you had a plan with it to hold it, then don't deviate from the plan. But if you just I don't recommend ever selling at a loss, but as long as you didn't go too big on there, you should be good. But if you went too big and you lost a lot, then learn from the lesson and don't chase hype stocks. That's all I can tell you. I don't even know. Like, have you ever even used Rubius? Do you even know what Rubius is? Like, come on. Like, why would you even buy that in the first place? You know? So just learn from it. That's all I can tell you to do. Learn from the mistake. And if it goes back up, then that's dope. You'll make money. That's good. But like, if it doesn't, just learn. Don't chase hype stocks. Don't buy stuff at all-time highs. Don't buy things that are literally, let's look at this. Literally let's see. A week ago I could have got this for $12. Like, you know, just learn from it. You paid almost a 200% premium on shares. Loading. Yeah, we still got like an hour till Powell comes on. Just feel like it's going to dip and spike. I mean, anything can happen. I just don't know why you would even buy that. Like, you don't even know what Rubius Therapeutics is. You probably don't even know why it went up. You know? Like, I can look at it right now. I can tell you why it went up. But it's a therapeutic company. That happens all the time. Therapeutic companies, you just can't chase stocks like that. Like, get a long term. Buy stocks that are actually good and have a history of doing good. Like, why did you even take the trade in the first place? What did you think was gonna happen? You know, you gotta ask yourself these things. Because if you just bought it and you thought it was gonna keep going and going and going, like, that's not investing. That's gambling. You're not investing. You need to invest. You need to buy quality companies and hold them. Like, you can't just be trying to buy something because you think it's going to go up hundreds of percents. Like, if you want to do that, just learn how to trade options. Not a recommendation, not financial advice, but it's better than putting your money in low quality stocks. But realistically, you shouldn't even trade options. You should just be buying high quality companies and trying to build wealth instead of trying to chase wealth. You don't need to chase it. You chase the wealth, is spread its wings and fly away. Yeah. And just but like Schleppy said, biotechs and therapeutic companies, pharmaceuticals, like you see those pop. It happens literally almost every single day. There's always something happening in that world. So you just got to be careful with those cuz they do pump and dump like crazy. But get a long term, invest in good companies, learn from your mistake. If it comes back up, that's good. Hopefully you make some profit. But if it doesn't, just learn from it, bro. Don't let it beat you up. And if you went way too big, like if you literally like if you're trying to chase something like that, you should only be putting in like a couple $100. Like I'm assuming you put in thousands because that's what everyone does for some reason. But you don't need to do that. You don't need to chase these large gains, bro. Just get a long term. Solid companies. Five shares of 33. Well, there you go. You went small. Most people that come in here and do something like that, they literally put thousands of dollars down. So just be thankful you only put like $150 in there. So you did good. You did good, bro. Just be patient. If you get clapped on $150, I mean, oh well, move on to the next play, but just get a long term. Get a long term. Where's my hashtag long terms? No hashtag long terms in the chat? What happened? We need a hashtag long term. Trying to learn about trading. Wanted to ask what we can expect on the markets regarding the Fed. You'll see what happens. You can't predict where the market's gonna go unless you're really experienced with the market. You can't. And the Fed, like you really can't judge how the market's gonna react off the Fed. So if you're new to the market, you shouldn't be trying to trade off something like this. You should be reading like Candlestick Trading Bible, focusing on, one stock at a time. Start with the SPY, maybe move on to some other stocks like Apple, Facebook, Microsoft. Start focusing on those, learning how they move, but just take it slow, bro. Take it slow and get a long term. Hashtag long term. Treat stocks like hot potatoes. I don't. I like the long term. The long term's dope. Just go slow and steady on the trading. Slow and steady. But I mean, realistically, usually when you have an expectation of the market, that's when you get clapped. You should never have an expectation. 20 minutes? They say Powell's in 20 minutes, but I swear it's at 12:30. What is this? Why do they keep changing the time? First it's tomorrow, now it's 12 o'clock? I don't get it. They need to make up their mind. Who's ready for the tech bear to continue? I mean, I got a long term filled with tech, so I don't really care what happens. I hope it comes down so I can buy more. I was down like $5,000 the last couple weeks on the long term. Think I'm scared of doing it again? Nah, I ain't scared, bro. Bring it. Bring the red. Bears don't last very long. They're just mean. They'll get clapped. I'm gonna have to read that later. Do you insure with puts? I mean, if it's violent enough, I'll buy some puts, but like, if it's not volatile, then I'm not worried about it. There's no point in buying puts if it's not volatile. You won't make money. Luck of the Irish be with all of you. I always forget it's St. Patrick's Day. Happy St. Patrick's Day, everyone. I hope your portfolios are green. Hope your mine's not, but I mean, that doesn't matter. Hope you're wearing green. But I mean, it is COVID, so nobody should be pinching you. If someone touches you, be like, ew. Ew. V-dub, fall from glory, or start around 2. I don't know. We'll see. The volume's kind of slowing down. Vice and BuzzFeed are looking to go public through a deal with a SPAC. Ugh. Gross. That one's going to be hyped as fuck, though. Maybe. I don't know. I don't know if, like, BuzzFeed or Vice is something people would invest in. I mean, probably, but that's still weird. Trying to learn first before buying any stocks. How will markets react if Fed confirms about inflation issues, and what happens if Fed disregards any inflation or minimum at least? I mean, you'll see the market react, but it doesn't really matter. Like, if just start your long term, bro. Like, it doesn't matter what the Fed says. It doesn't matter what the Fed does. Like, start your long term. People who wait to start their long terms usually never start them, because if the market does drop, you're going to be scared to buy in. Whereas if you just start now, scale in slowly, you already got your hands in the game. So whatever happens, you can average down if it comes down, and then if it goes up, you're already in the game. So never doesn't matter what the Fed's doing if you just start your long term. As long as you're buying good, solid companies, like you should have an outlook of 10, 20 years. It doesn't matter what's happening right now. And I literally just said this, and I'll say it again. If you have a expectation for the market just because of a certain event that's happening literally right now, you're most likely going to get clapped. If you hit it, dope. But have that 10, 20-year outlook. Like realistically, if inflation does go crazy, you might see stocks react in the short term, but inflation long term is good for assets. It means everything's getting more expensive. Just because it claps in the short term doesn't mean nothing, but realistically, the Powell's most likely just going to say what they've always said, 2% inflation target. They're not expecting anything crazy to happen because they've literally already said it before multiple times. Even Treasury Yellen said it. Like, they don't expect inflation to go crazy just because of a $1.9 trillion bill. Like, I don't know. It could boost it up a little bit, but it's not going to be what everyone thinks it is, I'm sure. And even if it is, that's dope. Bring it. Run the inflation. I don't care. I'll just buy more stocks. Desktop Metals? No, I don't know what that is. I don't invest in things I don't know what they are. I don't like the looks of this. It's decent, but I literally don't know what it is, so just invest in companies you actually know what it is, and you've used it. Keep it simple. Thanks for the broadcasting live. Will the Fed decision today affect crypto market? They say that the crypto market decouples the stock market, but I don't think so. I don't know. Crypto's weird. But if you saw a huge drop in the stock market, like you would see a drop in crypto. I mean, it depends on the situation though, because crypto is its own entity. It's hard to say. Crypto's not really. If anything, crypto has more, what's the word? It moves more with currency than stocks. So if you really want to get a good idea of how the crypto market's going to move, just start watching currencies. But it's hard to say because crypto is literally just its own thing. I used to look at crypto as like an inflation asset. So if you see inflation go crazy, you should also see crypto go crazy. But at the same time, like I said, crypto is its own thing. It's hard to say what's going to happen to that. I only like Bitcoin personally. Every other coin is not my thing. Gotta answer the classic. What lessons have you learned from your time in the markets? Don't FOMO and go slow. Honestly, that's the best advice I could give. Like if you FOMO, you're most likely gonna get clapped. But if you go slow and steady, like couple stocks here, couple stocks there, average down when you can, you'll do good. But if you're trying to drop like a big ass amount and try to chase that bag, it's most likely not going to work. It could work. Like this is the market. People make money every single day, but people lose money every single day. So you just got to be aware of the risks. But I mean, for the most part, every time I went small and just scaled in on a stock, it worked out a lot better than when I dropped a big bag on it. Agree with you that crypto closely relates to the dollar value. Well, it also relates to like the other countries' value as well, because when the first time Bitcoin was ripping, or the crypto market was ripping, when Bitcoin was like 20K and it went up to like 40, 50, you were seeing the Chinese yen. Or is it, why do I always get the Japanese currency and the Chinese currency mixed? I don't know why. I literally don't know why. It happens all the time. The yuan, the Chinese yuan. You were seeing the yuan like getting really, really strong, or not strong. You were seeing it get weaker or stronger. I can't remember. It was a while ago. I need to look at the chart to for sure know what I'm talking about, because it's been a minute. Yeah, you were seeing the Chinese currency weaken a lot. So, I don't know. Pretty much global currency has some effect to Bitcoin. Ugh. Or did I say weaken? If I said weaken, I meant strengthen. Because you can go look at the Chinese currency and see how it moved compared to the US dollar all throughout that time when Bitcoin was ripping, and it was literally the only currency that was moving like that. It was kind of interesting. How do you know when to take a loss? I don't put in an amount that I'm not willing to lose. That's how I do it. That's why when I trade options, I literally do like super small plays, because every single option trade I do, I expect to lose on it. And when it comes to stocks, I mean, most of the stocks I buy, I plan on holding for multiple years. So if I'm down on it, I really don't care, because anything can happen in the market. Crypto has high interest rates if you are into custodial companies. What's a custodial company? I don't think I've ever heard of that. Make more money on my interest than I did at my job because of the high yields. That's good. That's good. That's good. Gemini or BlockFi. See, I don't know enough about crypto to even know what that is. I'd have to look into that. I think Powell's going to be on here soon. I usually don't like high interest rates, though. It just means high risk. Not my thing. What's up, Wong William? Glad to see you here, bro. I don't think I've seen that name in here before, so God bless you. Shout out all the new people that I haven't seen in here before. Nin Loki, Tina, Mr. Chris, Ace of Spades, Nicholas, Vice, Shout out OnePlus too. OnePlus is killing it right now. He's working. My man. May I know your strategy of trading options? Get a long term and don't trade options that often. That's the strat. Only trade when the market's moving in your favor, when there's actually volatility. Options are literally just gambling, so you got to be careful. But I like to shop for option prices or options and make sure I'm not paying too much of a premium. That's usually the best way, because if you're paying too much premium on an option, you can get clapped really quick. To Bitcoin safe havens? What do you mean? Mr. Powell. Whoa. All right, I think Powell's going to be on here in a second. There's no live streams up of him. This is E-Trade Pro. Hello, Jerome. Where are you? Mr. Jerome, are you here? I still don't see the live stream yet.
Friends would walk up to me and just be like, "What the f is in your mug?" And nervous. So obviously, Michael.
BOFA. I don't know what that's abbreviated for, honestly. Oh, hilarious. Well, now you're getting timed out, so God bless you. Wrong chat to do that here, bud. If you can't keep it positive and respectful, you might as well just not even talk in the chat, because I'll just time you out or I'll ban you. I don't really care. Doesn't matter to me. Like, I don't need that kind of shit in my chat, bro. Keep it positive and respectful. Market's going kind of crazy here. Still waiting on Powell. You laughed. I don't even know, like, I don't even get the joke. So I'm confused. Dude, why is the market just ripping all of a sudden? That's so random, bro. Like, literally everything is just ripping right now. All Fed officials see rate. Oh, it's because it's because of the Fed minutes. I think the Fed minutes just came out. Well, no, that's not the Fed minutes. I think they release like a statement before the actual speech. I think the speech is at 2:30. I think they post the, what is it called? I forget what it's called. Like the testimony, maybe? I don't know. I'm going to look it up, though, because the market's going crazy. But I'm seeing a lot of headlines. Fed keeps rates near zero. Medium dot shows on hold through. Fed sees year-end U.S. jobless rates at 4.5% in 2021, 3.9% in 2022, 3.5% in 2023. Median long-run forecast at 4%. So maybe, I don't know, maybe people thought they were going to change rates or something. Kind of weird. I don't know why people would think that. Fed sees PCE inflation at 2.4% in 2021, 2% in 2022, and 2.1% in 2023. So they raised their inflation expectation a little bit there. I think. I don't remember them saying that they were gonna that they saw 2.4%. I don't remember them seeing that at all. I thought they wanted 2% or. I mean, I guess 0.4% is moderately above 2%, but that's new, I think. I'm pretty sure that's new. Here, I'm going to look through this myself. Oh yeah, it's the FOMC statement. That's what it's called. So the statement just came out, and the actual press conference will be out, or will be in like 30 minutes. Man, we got 80 people in here. Make sure you guys hit that like button if you have not. We appreciate you being here. Keep it positive and respectful in the chat. Feel free to say what's up. God bless you. Bond yields go up, market equities go down. Not exactly. Bond yields go up when inflation is expected to go crazy. We literally had like an hour-long lesson on bonds before this, so I really don't want to talk about bonds anymore. Make sure you guys hit that like button, though. There's a lot of people in here. Also hit that subscribe and notification bell so you can be notified when we go live. We're live here, market open to market close Monday through Friday, so you'll definitely want to hit that notification bell and you will be notified the second we go live. Realistically, all you got to know is when inflation is expected to be higher, you're going to see the bonds react, or you're going to see the bond yields go up because there's going to be more selling of the bonds. So that makes the prices of the bonds drop, and in return, it makes the yields go up. If inflation is expected to come down, you'll see the bond rate, or you'll see the bond yields react negatively. Bond yield prices go up because it's basically that. There's more to it. You could literally go into hours of research on bonds. There's a lot, but that's pretty much the simplest way. I just did. What do you mean? I literally just explained the bonds. I wasn't around for Volcker. What is a bond? It's a government-backed security. Fears of inflation. equals market red. That's not necessarily true, because if there was inflation, that would mean prices are expected to go up. So in return, you would be seeing asset prices go up in value. Maybe not in the short term, but in the long term, you'd be seeing asset prices go up. Oops. Yeah, we'll see what happens. The bond yields went crazy after that statement was released, though. This is E-Trade Pro. I don't know what SUMA's abbreviated for, but I swear if it's a joke, I'm gonna ban you. Yeah, I fucking knew it. God damn it. You guys are so fucking stupid. Nah, you're getting timed out too, AI, just for even reacting. You guys are whack as fuck. Like, grow up. Ask a serious question. Post a play. Post some news. Do something useful. Like, this isn't the chat for that. If you can't keep it positive and respectful in this chat, I'm just gonna time you out. And if you continue to fucking be a little baby, or I guess that's not the right word. I didn't want to say bitch, but if you continue to be a little bitch, I'm just gonna frickin' ban you from the channel. Like, I don't give a shit, bro. This is my stream. I don't want none of that shit here. Keep it positive and respectful in the chat, or leave. There's a bunch of other streams you guys could go to. Make sure you hit that like button, though. This is E-Trade Pro. I don't review stocks here, Mark. People get mad when I review stocks and I don't give them what they want to hear. So we don't do that here. Like, I appreciate you being here, Mark. I can't do it. People like legitimately get mad. I don't want to hurt anyone's feelings today. I'm not in the mood for it. Even though I just got mad at those two people, but still, just like, yeah. I can't do it, bro. People's feelings get way too hurt. when I don't say it's not gonna go to the moon. Like, I know that's all they want to hear. They just want to be like, oh, it's going to the moon. Oh, but nah, I'm not gonna say that. So it's like I just gotta stay away from that. You just blasted the kid and asked for a like. I wasn't blasting him. I just wanted to be straight up. Like, I would love to review his stock, but whenever we have a bunch of just random people that come in here for these like conferences or for IPOs or anything like that, and they ask me about a stock and I review it, they usually get mad. Like, I've had people literally send me hate emails because I didn't agree with what they were looking at. So I just try to stay away from it. Like, if you want to stick around and hang out, be one of the people that actually come into the stream consistently, then yeah, I'd be happy to review a stock for you or whatever it may be. But if it's just like some random person I've never seen in here before, I can't do it. I'm not trying to hurt feelings. But I feel like I've seen Mark in here before. I'm not positive. That name kind of looks familiar, but I don't know. It's hard to say it. It's hard to tell sometimes. I really just know my OGs. Best Buds premium hemp and CBD products. Let's go. Let's go. That's funny. What if I give you tendies for tips? Nah, because I don't call them tendies. You should never call it tendies. For sure, Mark. I thought I seen your name in here before, but wasn't positive. Either way, much love. I'm not trying to like be a hater or anything like that. I just literally don't want to make people mad because I don't have the same view as like 90% of, probably like 95% of the people who are in the market. So I just gotta not do it. First time seeing green today, for real though. We'll see how long it lasts. It usually always happens coming into the Fed. I already answered you, Patrick. It's a government-backed security. But also corporations can sell bonds as well. But I assume you're referring to the Treasury bonds. That's government-backed. Same way a company releases stock to raise capital, the government has treasury bonds. We got Powell in like 15 minutes. Yeah, it's because they released the statement before the press conference. So when buying a bond, do I own anything or just debt? Well, it's basically like getting a loan in a way. But you get paid interest every 6 months, whatever you put in also depending how long the bond term is. There's a lot that goes into it. But literally, when you buy a bond, you're buying the right to whatever percentage the yield is at, or not the yield, the coupon rate. So every 6 months, you're gonna be getting the coupon percentage of your money, and then after the maturity date, you get the full amount of the face value of the bond. There's a lot that goes into it, though. We literally went in like an hour rabbit hole of researching bonds, and I still don't even think I researched everything there is to know. There's a lot. There is a lot. I kind of want to buy a SPY put. It'd be funny. It would be funny. I'll wait, though. We'll see how the market reacts to the press conference. Why'd you sell your positions, though, Chad? Like, if you had a... Why don't you got a long term? Like, if you had a plan to hold those for the long term, why would you sell them just because of a red day? Powell's words turn it back red. I feel like that's what's gonna happen, honestly. But we'll see. Short-term swing position. All right, as long as you got a long term, bro. Got to get that long term. Make sure you guys hit that like button if you have not. We appreciate you guys being here. Hope you're having a blessed day so far. Keep it positive and respectful. This is just almost what happens. Like, I don't know, actually. I can't really remember the last Fed meeting or the last Fed press conference, but I'm pretty sure this happens like every single time. Why would I buy a put on the SPY? Because I'm a degenerate. You gonna narrate the market while he speaks? I might just have him up. I don't know if I want to, because there's people in this chat specifically just to listen to him. I don't know if I want to interrupt. I mean, I want to listen to him too, so I'll probably just listen to Powell and watch the market at the same time. Tax deadline extended a month. Yeah, that news came out a while ago. I just didn't post it. I mean, you can do whatever you want, bro. I just prefer the SPY. But realistically, the only reason I even said that is because I'm a degenerate. Like, if I played an option right now, it'd be kind of sketch, especially with that pop right there. That was nuts. Got about 8 minutes till Powell. Make sure you guys hit that like button. We got like 80 people in here and only 30 likes. Come on, let's run up those likes. I won't put up Powell until we're at 50 likes. We need at least 50. Is that so much to ask for? There's 80 people in here. I feel like 13 more people can hit the like button for Powell. I feel like that's doable. Do it for Powell, baby. Do it for Powell. We got 6 more likes to go. Hey, God bless you, Mark. I appreciate you, bro. Except my stream's spazzing out. Don't do this to me now, stream. Don't do it to me now. Pal does deserve a like. He saved your ass, bro. He's the only reason your markets are up right now. We need 1 more like for 50. I think Pal deserves multiple likes. Our host is not a Reddit degenerate. Nah, he's just a normal degenerate. Just your normal, everyday degenerate. Oh, come on. Where's those 50 likes, bro? Let's go, baby. 2 more likes for Powell. 2 more likes for Powell. Hey, there's 50 likes. Let's go. Let's go, baby. All right. I'll get Powell ready. We gotta find him. Oops. Where is it? Where's the scheduled one? Where did it go? Right here. $49. You guys better hit that like button. I won't even put up Pal. I'm just kidding. I'll put him up, but you guys should hit that like button. Also subscribe and hit that notification bell so you can be notified when we go live. We're live here. Market open to market close Monday through Friday. So you'll definitely want to hit that notification bell and you will be notified the second we go live and also when we post videos. 49. Oh, come on. Let's get those 50. Okay, we got 52 likes. We're good. Mr. Powell. There we go. Be a boss man. Yeah, join the membership if you want. If you want. Show some love. I mean, realistically, you just got to hit that like button. If you want to join the membership in the future, hang out with us every day, give us a chance, that's dope, but I'm not really expecting anyone here today to stay. Most of the time, nobody actually ends up coming into the stream consistently on days like this. They just come in, get whatever they want out of Powell, and then they're gone. But we still love you. Appreciate you being here. Can you tell me US 30 will go down or up? I mean, it's either going to go one of those ways. So, there you go. Like, bro, you can't have an expectation. You shouldn't be asking some random person on the internet what's going to happen, because nobody actually knows. 10-year yield didn't budge? Really? Wait, that's the 20-year. I don't know what the 10 years ticker is. I forgot. I guess I could just look at the future. It kind of moved. The 30-year actually came down, or the price of the 30-year came down, but the price of the 10-year went up. That's weird. That's weird. Let's see. We got 2 minutes till Mr. Powell. I hope you guys are ready. Hey, God bless you, Roman. Appreciate you, bro. No return button on real life, and reverse the action and need to think 7 times before doing something. Nah, just keep it simple, bro. Keep it simple. Slow and steady and simple. The three S's. Not ready? You better get ready. He's coming. I don't know where he is. He should be here. We're waiting on you, Mr. Powell. Hello, Jerome. Jerome, where are you? Powell, where are you? Hello, Powell. Ew. That was gross. Where is this man? Where you at, Powell? Say thing twice and you think 7 times? I mean, I guess it's better than not thinking it at all. That's for sure. Oh, here's Pal. All right, here you go. I love you guys. I'm out of here, though. Enjoy, Pal.
The danger to the U.S. economy was also clear. Congress provided by far the fastest and largest response to any post-war economic downturn, offering fiscal support for households, businesses, healthcare providers, and state and local governments. Here at the Federal Reserve, we rapidly deployed our full range of tools to provide relief and stability, to ensure that the recovery will be as strong as possible, and to limit lasting damage to the economy. we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. The economic fallout has been real and widespread, but with the benefit of perspective, we can say that some of the very worst economic outcomes have been avoided by swift and forceful action from Congress, from across government, and in cities and towns across the country. More people held on to their jobs, more businesses kept their doors open, and more incomes were saved as a result of these swift and forceful policy actions. And while we welcome these positive developments, no one should be complacent. At the Fed, we will continue to provide the economy the support that it needs for as long as it takes. Today, the FOMC kept interest rates near zero and maintained our sizable asset purchases. These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. The path of the economy continues to depend significantly on the course of the virus and the measures undertaken to control its spread. Since January, the number of new cases, hospitalizations, and deaths has fallen, and ongoing vaccinations offer hope for a return to more normal conditions later this year. In the meantime, continued observance of social distancing measures and wearing masks will help us reach that goal as soon as possible. The economic recovery remains uneven and far from complete, and the path ahead remains uncertain. Following the moderation in the pace of the recovery that began toward the end of last year, indicators of economic activity and employment have turned up recently, although the sectors of the economy most adversely affected by the resurgence of the virus and by greater social distancing remain weak. Household spending on goods has risen notably so far this year. In contrast, household spending on services remains low, especially in services that typically require people to gather closely, including travel and hospitality. The housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. The overall recovery in economic activity since last spring is due importantly to unprecedented fiscal and monetary policy actions, which have provided essential support to households, businesses, and communities. The recovery has progressed more quickly than generally expected, and forecasts from FOMC participants for economic growth this year have been revised up notably since our December summary of economic projections. In commenting on the stronger outlook, participants noted progress on vaccinations as well as recent fiscal policy. As with overall economic activity, conditions in the labor market have turned up recently. Employment rose by 379,000 in February, as the leisure and hospitality sector recouped about 2/3 of the jobs that were lost in December and January. Nonetheless, employment in this sector is more than 3 million below its level at the onset of the pandemic. For the economy as a whole, employment is 9.5 million below its pre-pandemic level. The unemployment rate remains elevated at 6.2% in February. This figure understates the shortfall in employment, particularly as participation in the labor market remains notably below pre-pandemic levels. Looking ahead, FOMC participants project the unemployment rate to continue to decline. The median projection is 4.5% at the end of this year and moves down to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been the hardest hit. In particular, the high level of joblessness has been especially severe for lower-wage workers in the service sector and for African Americans and Hispanics. The economic dislocation has upended many lives and created great uncertainty about the future. Overall inflation remains below our 2% longer-run objective. Over the next few months, 12-month measures of inflation will move up as the very low readings from March and April of last year fall out of the calculation. Beyond these base effects, we could also see upward pressure on prices if spending rebounds quickly as the economy continues to reopen, particularly if supply bottlenecks limit how quickly production can respond in the near term. However, these one-time increases in prices are likely to have only transient effects on inflation. The median inflation projection of FOMC participants is 2.4% this year and declines to 2% next year before moving back up by the end of 2023. The Fed's response to this crisis has been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As we say in our statement on longer-run goals and monetary policy strategy, we view maximum employment as a broad-based and inclusive goal. Our ability to achieve maximum employment in the years ahead depends importantly on having longer-term inflation expectations well anchored at 2%. As the committee reiterated in today's policy statement, with inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. I would note that a transitory rise in inflation above 2%, as seems likely to occur this year, would not meet this standard. In addition, we will continue to increase our holdings of Treasury securities by at least $80 billion per month and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since last March has materially eased financial conditions and is providing substantial support to the economy. The economy is a long way from our employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. Our forward guidance for the federal funds rate, along with our balance sheet guidance, will ensure that the stance of monetary policy remains highly accommodative as the recovery progresses. Our guidance is outcome-based and ties the path of the federal funds rate and the balance sheet to progress toward reaching our employment and inflation goals. Overall, our interest rate and balance sheet tools are providing powerful support to the economy and will continue to do so. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We are committed to using our full range of tools to support the economy and to help assure that the recovery from this difficult period will be as robust as possible. Thank you. I look forward to your questions.
Howard from Reuters.
Hi, Chair Powell, and thanks for that. So could you talk us through how the forecasts for 2021 map into the substantial further progress definition? 2.4% inflation, I understand that's considered transitory. That still seems like some progress there. 4.5% unemployment. Is it time to start talking about tapering yet?
Not yet. So as you pointed out, we've said that we would continue asset purchases at this pace until we see substantial further progress. And that's actual progress, not forecast progress. So, and that's a difference from our past approach. So, and what we mean by that is pretty straightforward. It is we'll want to see that that the labor markets have moved, labor market conditions have moved, have made substantial progress toward maximum employment, and inflation has made substantial progress toward the 2% goal. That's what we're going to want to see. Now, that obviously includes an element of judgment. And when we see, we'll be carefully looking ahead. We also understand that we will want to provide as much advance notice of any potential taper as possible. So when we see that we're on track, when we see actual data coming in that suggests that we're on track to perhaps achieve substantial further progress, then we'll say so. And we'll say so well in advance of any decision to actually taper.
If I could follow up on that, the shift in the dots, why wouldn't that suggest a weakening of the commitment here? An awful lot of people shifted into 2022, it seems.
I don't see that at all. You know, we have a range of perspectives on the committee. I welcome that, and you know, we debate things, we discuss things, and we always come together around a solution. But you know, the strong bulk of the committee is not showing a rate increase during this forecast period. And you know, as data improve, as the outlook improves very significantly since the December meeting, you would expect forecasts to move up. It's probably not a surprise that some people would bring in their estimate of the appropriate time for liftoff. Nonetheless, you know, the bulk of the committee, the largest part by far of the committee, doesn't show a rate increase during this period. And again, part of that is wanting to see actual data rather than just a forecast at this point. We do expect that we'll begin to make faster progress on both spending, you know, labor markets and inflation as the year goes on because of the progress with the vaccines, because of the fiscal support that we're getting. We expect that to happen, but, you know, we'll have to see it first.
Great, thank you. Victoria.
Hi, Chair Powell. I wanted to ask about the supplementary leverage ratio. You know, there's been a lot of talk about what you all are going to do this month, which I'm happy to hear an update if you have one. But just sort of more broadly, do you think long term that the leverage ratio poses problems for implementing monetary policy at a time when the reserve supply is going to remain large? And if so, do you think that changes to the leverage ratio, including the SLR, are the way to deal with that problem?
Victoria, we'll have something to announce on that in coming days, and I'm not going to expound upon your questions. Why don't you ask another question if you'd like to, because that one I'm just going to say that we're something in coming days.
Sure. Okay. Well, then I'll ask about unemployment. You know, there's the unemployment rate is you all have projections for the U6 rate, but you've also been, you know, really emphasizing the fact that that's not the only thing that you all are looking at. You're also looking at labor force participation and things like that. So are you all looking at ways of maybe adding to how you're projecting the unemployment rate to the summary of economic projections?
Well, let me say, as we say in our statement on longer run goals and monetary policy strategy, we look to a range of indicators on labor market. We never only looked at the unemployment rate, which is the only indicator of labor market outcomes that's in the SEP. We look at a very broad range. You hear us talk all the time about participation, about employment to population, which is the combination of the two, about different measures of unemployment. So it's wages, it's the job flows, it's, you know, all of those things they go into an assessment, disparities of various groups. All that goes into an assessment of maximum employment. The trying to incorporate all of that into the summary of economic projections would not be practical. You know, obviously the thing that we do include is just the unemployment rate, and that's a very insufficient statistic. So it doesn't include a lot of other things that we do look at. And I wouldn't want to say that we're looking to include the other dozen things that we look at into the SEP, but from time to time we do look at adding different things. But I would just say the SEP it's a summary. It's one device. It's not going to include all of the things that we look at. I think you know the things that we look at. We talk about them all the time. So we're not actually looking actively at significantly broadening those indicators in the SEP right now.
Thank you. Chris Rugaber, Associated Press.
Thank you. Chair Powell, I wanted to ask about the forecast overall. You're forecasting a very low unemployment rate next year, and in 2023, you have inflation, or the Fed overall is in the SE% by 2023. Yet no rate hike in any of this forecast horizon. So is this telling us that you see a higher inflation rate than what's projected, or do you not? As you've been talking about, is the unemployment rate insufficient, or what is this telling us about the Fed's reaction function? That it seems you're meeting the Fed's dual mandate by 2023, yet again, no rate hike expected.
So I guess the first thing to say is that the SEP is not a committee forecast. It's not something we sit around and debate and discuss and approve and say this represents our reaction function as a committee. It's a compilation of reaction function as a committee. It's a compilation of projections from different people, but since we don't debate it or discuss it, it would be hard for me to say exactly why each participant did what they were going to do. So all I would say about this is that we've laid out what I think is very clear guidance on liftoff. And it's really three things: labor market conditions that are consistent with our estimates of maximum employment. And as I mentioned, we consider a wide range of indicators in assessing labor market conditions, not just the unemployment rate. Inflation that has reached 2% and not just on a transitory basis. And inflation that's on track to run moderately above 2% for some time. The first two of those three are very much data-based. The third does have a little bit of an element of expectations in it. So we are very much determined to implement this guidance in a robust way. It is the guidance that we chose carefully to implement our new framework. And to meet these standards, we'll need to see data, as I mentioned. So what does this SEP really say? It says that we're committed to our framework and to the guidance we've provided to implement that framework. We will wait until the requirements set forth in that guidance are clearly met before considering a change in our policy rate. And the last thing I'll say is this. The state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future. So that's how I would think about the SEP.
Thank you. Paul Kiernan.
Thank you, Chairman Powell. My question is twofold. One, how high are you comfortable letting inflation rise? There is some ambiguity in your new target, as you mentioned, expectations driven. And do you think that ambiguity might cause markets to price in a lower tolerance for inflation than the Fed actually has, thereby causing financial conditions to tighten prematurely? Is that a concern? Thanks.
So we've said we'd like to see inflation run moderately above 2% for some time. And we've resisted, basically, generally, the temptation to try to quantify that. Part of that just is talking about inflation is one thing. Actually having inflation run above 2% is the real thing. So over the years we've talked about 2% inflation as a goal, but we haven't achieved it. So I would say we'd like to, perform. That's what we'd really like to do, is to get inflation moderately above 2%. I don't want to be too specific about what that means because I think it's hard to do that. And we haven't done it yet. When we're actually above 2%, we can do that. Look, I would say this. The fundamental change in our framework is that we're not going to act preemptively based on forecasts for the most part. And we're going to wait to see actual data. And I think it will take people time to adjust to that and to adjust to that new practice. And the only way we can really build the credibility of that is by doing it. So that's how I would think about that.
Thank you. Matthew Bosler.
Hi, Chair Powell. This is Matthew Bosler with Bloomberg News. So there's a widespread presumption at this point that the U.S. will reach herd immunity sometime this year. And all along, you've said that the path of the economy is going to be determined by the course of the virus. I'm curious, based on the projections that you released today that show unemployment will still be above estimates of maximum employment through the end of next year and perhaps sometime into 2023, do you think policymakers need to be doing more here to sort of align the herd immunity and full employment timelines, if you will? Thank you.
So on herd immunity, I'm really going to leave that question to the experts. We don't control that. We're not responsible for defining it. And we'll leave that whole discussion to the experts. I mean, what we're focused on is is the part that we control, which is the support that we provide to the economy. And there we provided very clear guidance. And in the case of asset purchases, it's at their current level until we make substantial further progress. There is an element of judgment in that, and we'll supply clear communication well in advance of actually tapering. And we just went through the criteria for raising interest rates. They're very specific, and we're very much committed to having them fulfilled robustly. I would agree with you that the path of the virus continues to be very important. We have these new strains which can be quite virulent, and we're not actually done yet. And we're clearly on a good path with cases coming down, as I mentioned, but we're not done. And I'd hate to see us take our eye off the ball before we actually finish the job. So that's how I would look at that.
If I could just briefly follow up, how do you see sort of the disconnect in terms of an economy that is expected to be widely reopened this year, but full employment taking longer to achieve? Is it the case that factors related to the virus will still be with us over the coming years? Is that how to interpret the forecast?
I think there's some of that. Sure, there'll be some of that. There'll still be some social distancing. People may be, for example, going into spaces that involve close contact with others. Some people will do that right away. Others will hold back, and so I think there'll be some of that. In addition, though, remember there are 10 million people, in the range of 10 million people, who need to get back to work, and it's going to take some time for that to happen. It can happen maybe more quickly than it has in the past because it involves the reopening of a sector of the economy as opposed to stimulating aggregate demand and waiting for that to produce job demand for workers. This could be a different sort of a process, and it could be quicker. We don't know that. But it's just a lot of people who need to get back to work, and it's not going to happen overnight. It's going to take some time, no matter how well the economy performs. Unemployment will take quite a time to go down, and so will participation. So that's all I can say. I think the faster the better. We'd love to see it come sooner rather than later. We'd welcome nothing more than that. But realistically, given the numbers, it's going to take some time.
Thank you. Steve Leisman.
Mr. Chairman, thank you. I wonder if you could, kind of a three-parter here, but all related. Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
The tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, across the curve, $80 billion in treasuries, $40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, it's slack in the labor market. It's sad to see because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. So we monitor those things. Our tools, of course, affect unemployment generally, but we're going to look at those as a form of slack in the labor market and hope that that there's progress there. And this particular downturn, of course, was just a direct hit on a part of the economy that employs many minorities and lower paid workers. The public-facing workers in the service industries, in many cases, don't have a lot of financial assets. They're not tremendously well paid. They might have other jobs and things like that. So this was a direct hit on that part of the economy, and it's the slowest part of the economy to recover. So, we like to see those people continue to get supported, as the broader economy recovers, which is very much doing now. In terms of disparate levels of vaccination, those are facts, unfortunate facts. They're really not something we have within our policy toolkit to address, but it is true, though, that the data we have suggests that there are significant disparities between different ethnic groups, and but that's not for us. That's for fiscal authorities and the government more generally to work on.
Thank you. Gina Smialek.
Hey, Chair Powell. Thanks for taking our questions. I was wondering if you could talk a little bit about how you see the fiscal policy support that has come down the line affecting the economy's potential in the longer term, just in the sense that you've talked a lot about the potential for labor market scarring and how that might weigh on our sort of future prospects. And I wonder whether you see that sort of working in reverse. If we pull people back into the labor market more quickly, does that improve our chances?
So I do think that fiscal policy overall will have really helped us to avoid much of the scarring that we were very, very concerned about at the beginning. And I think that's just the size and the speed with which Congress has delivered, with the CARES Act and since then, is going to wind up very much accelerating the return to full employment. It's going to make a huge difference in people's lives, and it has already. As I mentioned in my opening remarks, the recovery has been faster than we expected. Part of that just is very hard to predict, given we've never seen an event like this. But part of it is just the strength of the fiscal response, which I think will look good over the years. Longer term, to really, the first part of it is about avoiding scarring, and I think we've not avoided all of the scarring, but we've probably avoided the worst cases there. And I hope we keep at it, and we will keep at it with our policies, of course, to do whatever we can to make sure that continues. Longer term, though, what it takes to drive productive capacity per capita or per hour worked to raise living standards over time is investment in people's skills and aptitudes, investment in plant and equipment, investment in software. It takes a lot of investment to support a more productive economy and raise living standards. And that's, that hasn't been the principal focus with these measures, our measures certainly, and we don't have those tools. But what Congress has been doing has mainly been replacing lost income and beginning to, support people as the economy returns to normal. But there should be a focus on a longer term focus. I think would be healthy on the investment front.
Thank you. James Politi.
Thank you, Chair Powell. I wanted to ask a question about the Eurozone. While the outlook for the US economy has much improved, progress in the Eurozone has been far less encouraging, and it's showing signs of serious weakness due to the slower vaccination rollout and renewed lockdowns and restrictions. How worried are you about transatlantic economic divergence and the possibility that that trouble in the Eurozone and weakness in the Eurozone could drag down the U.S. recovery as it did in a way in the aftermath of the financial crisis?
You're right. The pace of the recovery is, we're having diverging recoveries here, as we did after the last crisis. And in this case, as well as the other one, the U.S.'s recovery is leading the global recovery. And we conduct policy, of course, here. Our focus is on our objectives are domestic ones. It's maximum employment and price stability here in the United States. We monitor developments abroad, and we know that because we know that those can affect our outcomes. So I think U.S. demand, very strong U.S. demand, if as the economy improves, is going to support global activity as well over time. That'll be through imports, and when the U.S. economy is strong, that strength tends to support global activity as well. So that's one thing. I don't worry in the near term. I'd love to see Europe growing faster. I'd love to see the vaccine rollout going more smoothly. But I don't worry too much about us in the near term because we're on a very good track. Very strong fiscal support coming. Now vaccination going quickly, and cases coming down. I think we're in a good place. It's all ahead of us, but the data should get stronger fairly quickly here and remain strong for some time here.
Thank you. Hannah Lang.
Hi, thanks so much for taking our questions. I wanted to ask if the Fed is planning on extending the same restrictions on bank dividends and share repurchases that are currently in place into the second quarter, and if you're considering at all the scenario analysis and mid-cycle stress tests that were in place last year, this year, and kind of what would make you consider doing something like that again.
So we haven't made a decision on that. We're a couple weeks away from announcing that decision. I won't foreshadow it here today. I will say we're going to continue our data-driven approach. You know that we restricted buybacks and dividends, so the firms are preserving capital. Through 2020, the banks actually increased their level of capital and their level of reserves. And the December stress tests showed that banks are strong and well capitalized under our hypothetical recessions that we used in December, which were quite stringent. We're right in the middle of our 2021 stress test, and we'll release those results before the end of June. And that layers, very significant additional stress on top of the stress the banks have already absorbed over the past year, with the unemployment rate going to 11% and stock prices falling more than 50%. But all of that, the results of the stress test and the decision on distributions, all of that is to come fairly soon, as I mentioned.
Thank you. Edward Lawrence.
Thanks, Chair Powell, for taking these questions. You laid out the standards to lift off, and back in June of 2020, you said you're not even thinking about raising rates. But I see 7 members seeing liftoff in 2023 and 4 next year. How much debate and how can you characterize that conversation has there been about moving off the lower bound earlier than signaled?
Well, it all depends. We've set out very clear criteria for liftoff. Right, where we've said we want to see labor market conditions that are consistent with our estimates of maximum employment. And that doesn't just mean unemployment, it means a much broader set of criteria. We want inflation at 2% and not on a transitory basis, and we want inflation on track to run moderately above 2% for some. Those are the three conditions. Everybody on the committee agrees to that, right? So it comes down to what's your projection for the economy. If you want to, people will have a range of assessments for how good the economy is going to be, and we don't. I would say that we're in a relatively highly uncertain situation. If you look at the uncertainty, people on the committee broadly say that uncertainty about the forecast is very high compared to the normal level. We haven't come out of a pandemic before. We haven't had this kind of fiscal support before, totaling it all up. So you're going to have different perspectives from committee participants about how fast growth will be, how fast the labor market will heal, how fast inflation will move up. And those things are going to dictate where people write down an estimate of liftoff. Of course, this isn't a decision to lift off now. We make that decision then. But it's an estimate based on assumptions about growth. And it's meant to be a tool to generally show the public how our objective function works, how we think about the future. It isn't meant to actually pin down a time when we might or might not lift off. We're not going to make that decision for some time. The chances are that the economy in that time and place will be very different from the one we think it'll be. So I sometimes with the dots, I have to be sure to point out that they're not a committee forecast. You know this, but they're not a committee forecast. It's just compiling these projections, really, of individual people. We think it serves a useful purpose. It's not meant to actually be a promise or even a prediction of when the committee will act. That will be very much dependent on economic outcomes, which are highly uncertain.
Thank you. We'll go to Brian Chung.
Hi there, Chairman Powell. I wanted to elaborate a little bit on your commentary about the fiscal stimulus. So it sounds like you, I guess, see the case for even maybe more investment, at least from Congress, to support the more productive economy, as you answered to Gina's question. So we just had $1.9 trillion in spending. So where do you see the fiscal space right now? Do you still, I guess, maybe see the country in a place right now where it wouldn't be a concern if there were to be more spending at this time?
No, so Brian, it's not up to us to decide what Congress should spend money on or when. I was answering Gina's question, which really was, how do we assure lack of damage to scarring, for example, or lack of damage to the productive capacity of the economy? And I think what's happened so far has done a pretty good job of that. But really, I wanted to make the longer run point that if to work on the productivity over longer periods, that comes down to a number of things. But one of those things is investment in people, in their skills, education, aptitude, all of those things. I'm not in any way suggesting that that's something Congress should work on right now, or that that's just not our job. I'm just saying that is what fiscal policy can do. That really monetary policy can't do is invest in the future productive capacity of the economy, raise potential growth. Those things are completely tools that Congress has. And again, I wasn't making a comment at all on the current fiscal setting.
Thank you. Next to Michael Derby.
Great, thank you for taking my question. I just wanted to get an updated view on your sense of your view on financial stability risks and whether or not you see any pockets of excess out in financial markets that concern you, either specifically to that area of the market or as in terms of like the threat that it could propose to the overall economy.
Sure. So, as you know, financial stability for us is a framework. It's not one thing. It's not a particular market or a particular asset or anything like that. It's a framework that we have. We report on it semi-annually. The board gets a report on it quarterly, and we monitor every day. And it has four pillars, and those are four key vulnerabilities: asset valuations, debt owed by businesses and households, funding risk, and leverage among financial institutions. Those four things, and I'll just quickly touch on them. So if you look at asset valuations, you can say that by some measures, some asset valuations are elevated compared to history. I think that's clear. In terms of households and businesses, households entered the crisis in very good shape by historical standards. Leverage in the household sector had been just kind of gradually moving down and down and down since the financial crisis. Now there was some negative effects on that. People lost their jobs and that sort of thing, but they've also gotten a lot of support now. So the damage hasn't been as bad as we thought. Businesses, by the same token, had a high debt load coming in, and many saw their revenues decline. But they've done so much financing, and there's a lot of cash on their balance sheets. So nothing in those two sectors really jumps out as really troubling. Short-term, I mentioned funding risk as the last one. So we saw again in this crisis breakdowns in parts of the short-term funding markets. Came under a tremendous amount of stress, and they've been quiet since the spring. And we shut down our facilities and all that. But we don't feel like we can let the moment pass without just saying again that some aspects of the short-term funding markets and more broadly non-bank financial intermediation didn't hold up so well under great stress, under tremendous stress, and we need to go back and look at that. So a very high priority for us as regulators and supervisors is going to be to go back, and this will involve all the other regulatory agencies. It does involve all of them as well, and see if we can strengthen those things. So that's a sort of a broader, detailed look.
Thank you. Michael McKee.
Mr. Chairman, can you help me understand something about the SEP and your forecasts? The inflation that you're talking about for this year, say, is transitory. Then by 2023, you're back down to 2.1%. There's no forecast for a rate increase for 2023. If you get to 3.5% unemployment, but inflation's only at 2 or 2.1%, are you willing to leave rates at zero going forward from there, or roughly zero going forward from there? In other words, could we be in a Japan-like situation where rates just stay low because inflation does?
Well, again, I wouldn't read too much into the March 2021 SEP dot plot. Remember what it is. It's a compilation of individual projections by individual members. They're all making different assessments. They have different forecasts, economic forecasts. Some have more optimistic ones, some less optimistic. And also remember that the SEP doesn't actually include all the things that go into maximum employment, right? It only includes unemployment. So I would just say we've set out clear guidance. The message from the SEP that I would like to leave with people is we set out clear guidance. I mentioned what it was. It's inflation it's labor market conditions consistent with our estimates of maximum employment. And that's not just unemployment, it's all the other indicators. But overall totaling up to maximum employment. It's inflation at 2% and not on a transient basis, and inflation on track to exceed 2% for moderately for some time. Those are the criteria. We're committed to robustly implementing that guidance, and that's what this says. That's really all it says. We're going to wait until those requirements are met. And again, the state of the economy in 2 or 3 years is highly uncertain, and I wouldn't want to focus too much on the exact timing of a potential rate increase that far into the future.
If I could follow up, I'm just wondering, before 2019, shall we say, you were focused on the problems with having interest rates too low. Now, are you saying we're willing to live with it until we reach these goals, even if you reach your goal on maximum employment?
So what I would say is we're committed to giving the economy the support that it needs to return as quickly as possible to a state of maximum employment and price stability. And, to the extent having rates low and support for monetary policy broadly, to the extent that raises other questions, we think it's absolutely essential to maintain the strength and stability of the broader financial system, and to carefully monitor financial stability questions, if that's what you're getting at. We do that. We monitor them very carefully. I would point out that over the long expansion, longest in U.S. history, 10 years and 8 months, rates were very low they were at zero for 7 years, and then never got above 2.4% roughly. During that, we didn't see actually excess buildup of debt. We didn't see asset prices form into bubbles that would threaten the progress of the economy. We didn't see we didn't see a housing bubble. The things that have tended to really hurt an economy and have in recent history hurt the U.S. We didn't see them build up despite very low rates. Part of that just is that you're in a low rate environment. You're in a much lower rate environment, and the connection between low rates and the kind of financial instability issues is just not as tight as people think it is. That's not to say we ignore it. We don't ignore it. We watch it very carefully, and we think there is a connection. I would say there is, but it's not quite so clear. We actually monitor financial conditions very, very broadly and carefully, and we didn't do that before the global financial crisis 12 years ago. Now we do, and we've also put a lot of time and effort into strengthening the large financial institutions that form the core of our financial system are much stronger, much more resilient. That's true of the banks. I think it's true of the CCPs. We want it to be true of other non-bank financial intermediation markets and institutions. So I think that's monetary policy should be, to me, provide for achieving our macroeconomic aims. Financial regulatory policy and supervision should be for strengthening the financial system so that it is strong and robust and can withstand the kinds of things that it couldn't, frankly. And we learned that in 2008, 9, 10. This time around, the regulated part of the financial system held up very well. We found some other areas that need strengthening, and that's what we're working on now.
Thank you. Anakin, CNN.
Thanks for taking my question. Jerome Powell, could you talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation? Does the former offset the latter to some degree?
I'm sorry, could you repeat that? You broke up there for a second.
Oh, no. I was hoping that wouldn't happen. Can you hear me now?
Yes, yeah.
Okay, great. I was asking if you could talk to us a little bit about the relationship between the persistent pandemic unemployment and the expected increase in inflation. I'm wondering whether the former offsets the latter and to which degree you guys are monitoring this.
You're asking about the relationship between unemployment and inflation? Is that the question?
Yes, exactly.
Okay.
They offset each other, the persistent pandemic unemployment.
Yeah, I think I'm hearing you correctly. So I would say a couple things. There was a time when there was a tight connection between unemployment and inflation. That time is long gone. We had extremely low unemployment, not extremely low. We had low unemployment in 2018 and 19 and the beginning of 20 without having troubling inflation at all. We were at 3.5%. We were bouncing around with unemployment 3.5% to 4%. And it wasn't just unemployment. Participation was high. Wages were moving up. It was a very healthy thing. And we didn't see price inflation move up. There is a relationship between wage inflation and unemployment. But that has not – what happens is that when wages move up because unemployment is low, companies have been absorbing that increase into their margins rather than raising prices. And that seems to be a feature of late cycle behavior. So we're not when we seek to achieve low unemployment, high levels of employment, which is our mandate. We think we have the freedom to do that based on the data, without worrying too much about inflation.
Thank you. Going to Greg Robb.
Hi. Thanks for taking my question. I wanted to follow up a little bit. I understand what you're saying about the dot plot and the message you're trying to send with the dot plot, but does the same apply for the taper Tantrum, you've said that it's going to take some time to get some fundamental progress on your goals, but it seems like some time could now be any time.
So we've said substantial further progress. Now, if you go back November, December, and January, progress in the labor market slowed very sharply. So you had an average of 29,000 jobs per month. If you go back and look at the level of job creation before that was very, very high, very high. So we weren't making any progress on the labor market from November through January. February, we saw a nice pickup, a good jobs report, 379,465 private sector. So that's good. It can go so much higher, though, and it would be nice to see to really make faster progress. That's different from substantial progress. We'd like to see it be higher than that, and I think it will be. That's the expectation. Is you'll see now, I think, really strong job creation return. Not as high as it was in the very early days of the recovery, the reopening of the economy, but nonetheless very strong. Okay, so what I'm saying is, to achieve substantial progress from where we are, having had 3 months of very little progress, substantial progress from where we are, having had 3 months of very little progress, it's going to take some time. And we don't want to get into, I don't want to get into trying to put a pin on the calendar someplace, because it's going to be data dependent. When we see ourselves on track to make substantial further progress, we're going to say so. We understand fully that test is one that involves judgment. If you remember, during the global financial crisis recovery, we said quantitative easing number 3 was the test was a substantial improvement in the outlook for the labor market. Well, what does that mean? Well, it means a substantial improvement in the outlook for the labor market. It meant we would communicate when we thought we had that. This is just like that, in a way. What we're saying is substantial further progress toward our goals. We'll tell people when we think, until we give us a signal, you can assume we're not there yet. And as we approach it, well in advance, we will give a signal that yes, we're on a path to possibly achieve that, to consider tapering. So that's how we're planning to handle it. It's not different really from QE3. And I think what we've learned from the experience of these last dozen years is to communicate very carefully, very clearly, well in advance, and then follow through with your communications. In this case, it's an outcome-based set of guidance, as our rate guidance is, and it's going to depend on the progress of the economy. That's why it's not appropriate to start pointing at dates yet.
Thank you.
Thank you. Don Lee, LA Times.
Hi, Chair Powell. As you know, households are sitting on a lot of excess savings, and I wonder if, combined with that, you have an unleashing of, pent-up demand. How much do you think that would affect inflation, and would you expect that to be transitory?
And everyone who's forecasting these, what we're all doing is we are looking at the amount of savings. We're looking at, we have reasonably good data on that, and we're looking at the government transfers that'll be made as part of the various laws, and we're trying to make an assessment on what will be the tendency of people to spend that money, the marginal propensity to consume. And from that, you can develop an estimate of the impact on spending, on growth, on hiring, and ultimately on inflation. So that's what we're all doing. And we have, we can look at history and we can make estimates, and those are all very transparent and public, and you can compare one to the other. And of course, we've all done that. And I think we've made very conservative assumptions and sensible mainstream assumptions at each step of that process. And what it comes down to is what I said before, which is there very likely will be a step up in inflation as March and April of last year drop out of the 12-month window because they were very low inflation numbers. That'll be a fairly significant pop in inflation. It'll wear off quickly, though, because just the way the numbers are calculated. Past that, as the economy reopens, people will start spending more, and that you can only go out to dinner once per night, but a lot of people can go out to dinner, and so and they're not doing that now. They're not going to restaurants, not going to theaters. That part of the economy and travel and hotels, that part of the economy is really not functioning at full capacity. But as that happens, people can start to spend. It's also wouldn't be surprising if, and you're seeing this now, particularly in the goods economy, there'll be bottlenecks. They won't be able to service all of the demand maybe for a period. So those things could lead to, and we've modeled that. Other people have too. And what we see is relatively modest increases in inflation. So, but those are not permanent things. What'll happen is the supply side. The supply side in the United States is very dynamic. People start businesses. They reopen restaurants. The airlines will be flying again. All of those things will happen. And so it'll turn out to be a one-time sort of bulge in prices, but it won't change inflation going forward because inflation expectations are strongly anchored around 2%. We know that inflation dynamics do evolve over time. There was a time when inflation went up, it would stay up, and that time is not now. That hasn't been the case for some decades. And we think we won't suddenly change to another regime. These things tend to change over time, and they tend to change when the central bank doesn't understand that having inflation expectations anchored at 2% is the key to it all. Having them anchored at 2% is what gives us the ability to push hard when the economy is really weak. If we saw inflation expectations moving materially above 2%, of course, we would conduct policy in a way that would make sure that didn't happen. We're committed to having inflation expectations anchored at 2%, not materially above or below 2%. So that's, I think if you look at the savings, look at all of that, model it, that's kind of what comes out of our assessment. There are different possibilities. I think it's a relatively unusual, very unusual situation to have all these savings and this amount of fiscal support and monetary policy support. Nonetheless, that is our most likely case. And as the data come in and the economy performs, we'll of course adjust. Our outcome-based guidance will immediately adapt, we think, to meet whatever the actual path of the economy is.
Thank you. We'll go to Scott Horsley for the last question.
Thanks, Chairman Powell. My question is about those supply chain bottlenecks, especially on the goods side. Are they getting better or are they getting worse? We saw they were sort of a drag on the industrial production numbers that came out yesterday. And what do you expect them to do to prices just in the short run?
To say, I think it's impossible to say, frankly, with any confidence, but I would expect, it's very possible, let's put it that way, that you will see bottlenecks emerge and then clear over time, and you'll probably see that over a period of time because, really the strong data are ahead of us. You're right now that the checks are going out just now, and that'll add to spending. COVID cases are coming down. Vaccination is moving now quickly. The really strong economic data is coming. It should be coming, assuming we stay on this track. And that's when you'll really know where the bottlenecks are. But you can see, though, that these are not permanent. It's not like the supply side will be unable to adapt to these things. The market will clear. It just may take some time. And some of the answer to that may be price. In many cases, it won't be price. You'll see that people are reluctant to raise prices. It's a little bit the story about, the wage Phillips curve does show that as unemployment goes down, wages move up. But companies choose not to try to pass that price increase along to their customers. So you'll see a lot of that here too, I think. Anyway, we'll see. But that's my basic sense. Thank you very much.
Thank you.
Powell, you did it again. He did it again. That was fun. Hope you guys enjoyed that. Appreciate everyone who came in here, showed love, kept it positive and respectful. God bless all of you. I really appreciate you. Not making stupid D's nuts jokes or anything like that. Like shout out to all the people who kept it positive and respectful. God bless you. Market is popping though. We only got 30 more minutes. Make sure you guys get your exercise. I've been sitting here for what, 6 hours? Right? About 6 hours, almost 7 maybe. I don't know. We've been sitting here for a while, so you got to get some form of exercise. Stand up out of your chair, walk around, stretch a little bit, get some form of exercise, get the blood pumping. But that was a good press conference. God bless you, Roman. Ugh. See, everyone just leaves. As soon as Pal's done talking, everyone's like, I'm going to head out. But I mean, thank you guys. Appreciate you. Come back again sometime. Or don't. Like, I don't know. We'll probably see you in the next Powell meeting. Trisha. What's up, Trisha? Hope you're having a good day so far. That's funny. What didn't you understand though? Like, he's just giving the economic outlook for the next 3 years now. But I mean, they have those press conferences like every month or something like that. Or maybe it's I don't know, I think it's every month. Maybe every quarter. I feel like we see a Powell a lot, though. He can predict the future. I mean, he can't really predict the future, but they just use history and just all the tools they have at their disposal to have a forecast of the future. I wouldn't say they could predict it, but they can give a very accurate forecast, because that's what they do for a living. They study the economy. They literally do it every day. Study history. But I really think the market, like why you were seeing the market kind of panicking coming into that, is because a lot of people thought they were going to increase the federal funds rate. And what that would do is that's the money that like banks get loans from, or get loans from each other. So since it's at near 0%, banks are able to get these loans very, very cheap, which in return, if certain companies want to get loans, or you want to get a personal loan, anything like that, the savings they get are going to pass on to you. So if a lot of these companies are borrowing money, they're able to grow a lot faster because they're not paying a huge interest rate on whatever money they're borrowing. Pretty sure. Could be wrong, but it's kind of how I understand it. I'm sure it goes a little bit more in depth than that. We only got 20 minutes left of the market, though. Bitcoin? Is Bitcoin ripping? Damn, I wish I would have got that Delta Airlines play. Oh, yeah. That 4-hour candle on Bitcoin's crazy. Jeez. Aggressive. Oh, these aren't up that much. But these were only like $20 yesterday. Oh, no, they were... Never mind. Those aren't the ones I was looking at, I don't think. Dude, that T-Cat's going crazy. That NFT Thug Life. Thug Life. What do I think about Chinese stocks? I don't know too much about like Baidu, Pinduoduo, all those ones, but I like Alibaba just because I actually know what it is. I know what they do. I actually bought Alibaba stock recently, which I mean, I'm almost at break even on it because I bought it for kind of expensive and I averaged down a little bit, but I think Baba's decent besides the news they're having right now. They've been getting a lot of fines, and I think I think the Chinese government's trying to like regulate them or something. They're having a feud with the Chinese government, which is kind of weird. But I like Baba. But I mean, I only have 2 shares of it, so you can. But that's what it's all about, going slow. Like if I bought like 5 shares of it, I would be down a lot more. And I wouldn't have been able to average down the way I did. Alibaba is AliExpress. I'm pretty sure. Pretty sure it's the same company. Damn, GM is doing really good. I can't believe I didn't get that play the other week. That was a solid one. No, it wasn't that. Maybe it wasn't a short term. I think it might have been a March 19th. For all I know. Yeah, I think it was. For buying human hair, extensions, wigs. I've never done that. I never even looked at that. I just know about AliExpress because you can drop ship on there. Or you can use the website to drop ship on other websites. I personally haven't really ever drop shipped, but I know how it works. AliExpress is your guy. Especially if you can find a good item. Like, there was a good-ass item I thought about a while ago, but I literally can't remember what it is that I wanted to drop ship. It was something kind of popular, but I literally can't think of what it is now for some reason. What was it? It was like a really good item. I don't know why I never looked it up. Yeah, I can't remember. I don't know why I can't think of it. Popular stocks are on highs like Apple, Tesla, Microsoft, Facebook, and others. Buying them now is, if you haven't started your long term yet, there's no great time to buy. Like, you need to start. And a lot of those stocks are kind of at discounts still from where they've been. But it's all on you. I just don't like buying things at all-time highs. That's my only thing. And I don't like buying companies I don't know what they are or know people that use them in real life or I use them in real life. Like, I just like to keep it simple. But if a price of a stock is stopping you from creating a long term, then you need to just start. Go slow. Buy like one share. Like, you don't need to drop a bag right as you enter. Like, you can just scale in. Like, one share now. Wait a few weeks, months, whatever you want to do. See what happens with the stock. If it comes down to a more attractive price, there you go. You only bought one share, so it doesn't really matter. You average down. If it continues to go down, average down again. And then eventually, like, since it's a popular stock that people actually want, it's eventually going to get to a price where people aren't going to, people are going to want to buy it at. Or a majority of people are going to want to buy it at, and you're going to see the inverse. And it's going to start going up. So, if you haven't started your long term yet, then don't hesitate to just buy a little bit. At the same time, though, like, if you're just trying to chase something, that's not what you're trying to do here. We're trying to build wealth and have long-term success. We're not trying to get that quick cash. Damn, coupons below 44. Woo, it's below where it was supposed to IPO at. That's crazy. But I mean, not financial advice, not a recommendation. I just know by experience that going slow is the best way. If you're not buying 100 shares straight up to like sell covered calls in the future, then just slow and steady, baby. Slow and steady. $5,000 for long term only for 3 years maximum, but I lost already a lot, and I have to pay a mortgage for $5,000 for 6 months each time. Well, I mean, why are you investing in risky ass stocks then? You already own a home. Like, your home is more valuable than any stock on the market. Like, your home is an asset. We literally talked about this earlier with, I mean, Matthew was from the Europe, so it's a little different. Like, I don't know where you're from, but I'm assuming you're from the US. Like, your home's an asset, bro. I don't know if you're aware of that, but your home is way more valuable than any stock. Like, your home doesn't go in value just because some crap news drops, you know? Like, your home is always going to hold value, especially if you're in a good location. Like, why buy risky ass stocks that you know nothing about when you could just literally invest more money into your home? Like, increase the square footage on your house or something. Do something. Thailand? I don't know the real estate market in Thailand, but still, you have a house. Your home is still building till I don't know what you mean by that. Like, if it's a brand new home, that's dope. Yeah, exactly. Like prices dropping should spell opportunity. They shouldn't spell panic. Like, if you bought something and you're panicking because the price is dropping, you probably bought the wrong thing. But if you bought something and the price drops and you're like excited about it because you can buy more, then you're probably in the right thing. You know? I mean, that's debatable because everybody's definition of what's good and what's bad is different, but like, if you're literally buying something that you use every day, or you know people use, you already know the long-term outcome of it. Like, just because the price is coming down right now in this moment, you already know that that company's still going to be here in 10 years, 20 years, whatever it may be. Like, it's not really a big deal if it drops. Any late day call plays for tomorrow? I'm gonna be like super slow on the options just because the market's not really moving. Like, you could have made some money off of this upside here, but I'd like to see more volatility in the market before we start running more plays, you know? Bought some dips in the morning. Ooh. Hell yeah. That's what I'm talking about. Dude, Dollar General is getting clapped. Casual mistake is to buy on high price and sell when the price is low. I think it's a psychological thing. Nah, I think you need to, if you don't have a plan going into a stock, I think you need to stay away from it, because just because the price goes down, it shouldn't change your future outlook of the stock you just bought. Like, why would you buy something and then sell it for cheaper? That's not how you build wealth. That's how you get clapped. That's how other people get rich off of you. Like, you literally need to just find companies that you want to hold and you want to invest in no matter what the price does. Like, that's the issue. None of that matters. Like, I know where you're coming from. Like, I've been a new trader before. I know what it's like to see your stocks go down, but you need to understand, like, if you're buying something, you should have faith in it. If you're buying something for a trade, it's kind of a little different, but you're new to the market, bro. You shouldn't be trading. You should be investing long term. Like, trading's cool. I love trading. It's dope, but like, I don't recommend trading to anyone who's new in the market, because you're just going to clap yourself. You don't understand what it takes to make money in the market. You're literally just gambling. So just start buying good companies, bro. And don't sell just because the price goes down. That's pointless. Like, you're literally throwing your money away. Like, if it's that difficult for you to not hold a stock because it's going down in value, then you shouldn't even be buying stocks. Like, you should literally be okay with your stock going down 50% and still not selling it. Like, you should be 100% okay with that. You should be 100% okay with that stock going to fucking zero, with still having faith that it'll come back. Obviously, that would never happen unless you're buying something garbage like Lucan Coffee or something, like something that got clapped. But like, really, you should 100% be okay with a stock going down 50%, because you should have the longer term outlook of what is going to happen. I believe that's a quote from Warren Buffett himself. Like, I'm almost 100% sure that's a quote from Warren Buffett. He said it personally. If you can't hold a stock when you're down 50%, then you're not an investor. You shouldn't even be trading in the market. What's up, Matthew? You missed Jerome Powell, bro. You missed Powell. It was fun. We had like 100 people in here for a second. People were making D's nuts jokes, and I clapped them. Amen on the faith. Faith is the most important thing, bro. Faith is what's going to get a lot of you guys rich. Like, it's not going to be one play. One play might help, but it's going to be at the right time. It's not just going to be one random play that you make one day. It's going to be all about the timing. Yeah, but 3 weeks is nothing, bro. 3 weeks is nothing. Literally. Like, talk about 3 years. Tell me where the stock's at in 3 years, and then tell me if you want to sell it or not. Like, 3 weeks is literally nothing. Like, I was down $4,000 in my long term 3 weeks ago. Did I sell anything? No, I just bought more. And now look at us. Now we're up Now we're back up 4 grand or 5. I don't remember where we were, but we're back up. My portfolio was literally like up like barely 2,000 2 weeks ago. And now we're up 6 grand, you know? Like 3 weeks is nothing. You just got to be patient. Like, this is what I'm trying to tell you, bro. Like, you don't have a long-term outlook. Like, if you think 3 weeks is a long-term outlook, you need to reconsider, because that is not a long-term outlook. 10 years, 5 years minimum. Maybe reevaluate your portfolio every like year or 2, but 3 weeks? Come on, bro. 3 weeks? Nah, fam. Not 3 weeks, but like, realistically, as long as you didn't drop a huge bag on whatever you bought at all-time highs, it's not a big deal. Like, if I can't remember if it was you or not, but you said you literally only bought like 100 shares of that one, or 5 shares of that one stock. Like, that's not that bad, bro. There's people that drop 10 grand on one stock and get absolutely destroyed. Like, be freaking stoked you only lost like 30, 40 bucks. There's people out here trying to gamble for real, bro. Trading is a whole different world. Worst thing I ever did was blend trading with investing. I use separate accounts now. Amen. I mean, I still trade on my long-term account, but like, I just don't care at all, like, what happens. Like, exactly, you got to be able to take a test like March. Like, if you can't hold your stocks through something like March, I don't know why you're here. Like, that can happen at any time, you know? Wait, did the market close? Oh, my computer was on mute. Ding 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 ding. Let's go, baby. Woo! Bro, that was a crazy day, bro. We were down 300 bucks in the long term. Now we're up like 500. Ooh! Ooh! Tell me the long term don't work, bro. Tell me the long term won't work. We were down 300 bucks today. Now we have 500? Come on. Come on, bro. Woo! Nobody could give me advice. Now I'm staying cash. Nah, bro. Like, just take it slow. Don't just sit on, like, if you literally just sit on cash, you're not ever going to invest. Just don't chase because you have some like weird like, I can't think of the right word, but if you're just like literally chasing something because you think you're going to make hundreds of percents in like a couple weeks, you need to not do that. You need to buy high quality companies, my man. Like, there's nothing wrong with just buying equity, but it's the way you do it. Like, if, like, you just need to buy high quality. Like, a big return does not equal high quality. Ever. Congrats on the dip buying. I didn't do anything today. Shout out anyone who did buy the dip, though. But, for real, though, I don't know. I appreciate everyone hanging out here. All the new people, God bless you. All my OGs, thank you for always staying in here, showing love, keeping it positive and respectful. I really appreciate you guys. Thank you. I just really appreciate you. I really appreciate your time. I love doing this, so the fact you guys hang out here, you could be in any other stream in the world. There's probably hundreds of different streams you could be in here, but you guys choose to hang out here, and I feel blessed to do that. I feel blessed that you guys do that. So thank you guys. God bless you. Much love. Like, I really appreciate your time, man. Time is super valuable. So the fact you guys just hang out here and, you know, give me your time in a way. Like, it's not like you're like giving me your time, but you're spending your time here, and I just feel blessed. So thank you guys. I really appreciate you. Much love. I don't know what I'm gonna do today. Honestly, what are you guys gonna do today? Anything exciting? I think I might go DoorDash. That could be fun, I guess. I don't really want to DoorDash that much, but I don't really want to go skateboard either at the same time. So I think I'd rather go make money instead. Go back to bed. Ooh, bed sounds nice. I don't want to go to sleep, though. I like sleep. I kind of napped a little bit during Powell, I'm not going to lie. It was nice. It was nice. Yeah. Damn, we got 60 likes today. God bless everyone who hit the like button. Even though that was funny, bro. I think it's funny, like, we literally had like 100 people in here, and then everyone just slowly dies out the more Pal talks. And then as soon as Pal's gone, everyone's just out, bro. They're like, nah, I'm good. I just want to hear Powell. Probably going to buy some physical gold. Ooh! Let's go, Trisha. You going to buy an ounce? How much you going to buy? You get an ounce coin? Maybe some silver? Silver is a little cheaper. What's gold even at right now? I haven't looked at gold in so long. You slept through all of Pal. It's okay. You didn't really miss anything, honestly. He just said the same stuff he always says. Oh, yeah. Gold's at a decent price right now. Kind of. Where's that out on the year? Oh, yeah. Actually, gold is pretty damn good right now. Realistically. For now, or some jewelry. Get that Cuban link. No, I'm just kidding. But maybe look into some silver. Like silver's kind of at a premium, actually. Gold's actually at a really good price right now. Damn. Maybe I need to buy an ounce of gold. Yeah, there is a lot of premium on the small quantities. You got to be careful with those. Shit, bro. Gold's actually at a good price. Platinum. I don't know. What's Platinum's ticker? Does anyone know? Best is from 1 ounce. I kind of want to buy an ounce of gold. Like, I don't know if it would go back to March lows. Honestly. PL equals F. Wait. I don't think that's the ticker. /PL. Oh, I found it. It's /PL. I found it. /PL on Thinkorswim. I always forget the future tickers, bro. Most liquid to sell and buy. I kind of like gold right now, low key. I didn't know gold was at that price. I wonder how much it is on the internet. I forget what website it is. Bullion. Oh yeah, AP Max. That's what it is. I really don't know. I'd probably just use like AP Mex or something. You gotta go somewhere that has a what's it called? I forget what it's called. But some of these, you gotta look at the reviews, I think. Yeah, if you have a local dealer, that could be good, but I mean, I'm trying to. I mean, you could use APMEX, you could use Bullion, or maybe find a local dealer. JM Bullion, I think that's what it is, JM Bullion. Jeez, a lot of these are expensive still, though. Like, gold's... They still got a fat premium on some of these websites. They don't sell to us. Yeah, I'm not sure if they're global, but if you could find a local dealer, that would be dope, because you'd probably be able to get a better price. If you buy online, you're going to be paying fat premium. That's the only lame part. Like, literally, this 1 ounce gold buffalo's 1963, and fucking the spot price is $1,700. Gold has a crazy premium. How do I feel about used gold jewelry? I'm not the biggest fan of jewelry, honestly. Like, I like diamonds and stuff. But if as an investment, I would probably just buy straight up coins or bars. Like, if you want to buy jewelry to wear or something, then that's dope. Like, go for it. But if you're trying to buy it as an investment, I think you should just buy coins or bars or whatever. Probably save up for an ounce, though, just judging by how much this is. Like, 1 gram's $80. What is that? 80 times 28. Jeez, yeah, if you're buying 1 gram, you're literally spending $2,240 per ounce. That's crazy. Maybe just get silver, honestly. Silver's premium's not as crazy. Jeez, never mind, bro. An ounce of fucking silver's $36? Are you joking me? Maybe it's not the time to buy metals, bro. Jeez, some of these premiums are insane. Maybe wait a little bit. I didn't know the premiums were this crazy right now. That's even on sale, too. Jeez, bro. Some of these premiums are fucked. Like, what the hell? Maybe give it a year. I don't know. Unless, like, you really, really want it. But, goddamn. I didn't know the premiums were like this. Yeah, just go buy a gun. Straight up. Go buy a gun. Like, if you want to buy precious metals, just go buy a gun. I feel like a gun will be better. I don't know. Not financial advice, not a recommendation, but fuck. I'm sure gun prices are a lot too. But at least guns hold their value. You could probably buy some pretty dope guns for used. You just gotta do your research and find like the right price of whatever gun you want to buy. I like the M&P shields, especially like if you want to use it as a protection as well. Or the 9mm M&P shields, those are pretty dope. But dude, I wonder how much those are. I don't even know where there's is. Let's see. M&P shield 385. I wonder how much a used one is. Guns are illegal here. Even better. I'm just kidding. That means the value will hold really good. Jeez, bro. Why is that? I mean, these are all like kits, but dude, I might buy a fucking M&P shield. You can get a brand new M&P shield for like $400, and people are selling them used for. Oh, never mind. I don't think you can buy this straight off the dealer. How are you able to get precious metals so cheap? Because of local dealers or what? I guess if you're not buying like certified paper physical metals, then I guess I could see that, but jeez, never mind. Guns are expensive these days, man. Oh, wow. So this one's 385. Locate a dealer. Rhodium? I don't even know what rhodium is. Oh, that's the price you're buying again? Okay, I was like, damn, bro, how are you even doing that? Yeah, I don't know. Why am I looking at guns, bro? Honestly. I sold all my guns a long time ago, and I honestly never have planned on buying more. But yeah, I don't know. Maybe wait on the precious metals. Like if you want some jewelry to like wear or something, that'd be kind of dope. I like jewelry's cool, but if you're not wearing it, it's kind of pointless in my opinion. Penn National Gaming approved to offer mobile and online Barstool Sportsbook in Virginia. Dude, UWMC's killing it right now after hours. Did they have earnings or something? Oh shit, UWMC is being added to the Russell, I think. Start stacking the bars. That's funny. Stack the bars, bruh. Let's see. I don't know if that news is real. I can't wait to just buy a house or multiple houses. I like precious metals, but I'd want to see the price down more. I literally didn't know the premiums were like that. Just always consider all precious metals they sell you fake, so test everything. If you get from a reputable dealer, I think you should be good. There's a lot of reputable ones online. That's probably why the premiums are so high, though, just because there's probably so much fake metals out there that the reputable dealers are able to charge that much because they know that, like, certificate is worth just as much as the gold. Silver coins and gold is tax-free. How are silver bars not tax-free? That's weird. What the hell? National sport here. I could tell. I mean, your guys' taxes are fucked though, so it makes sense. Silver bars are okay. That's interesting. Europe's weird, bro. Europe's weird. I've known people from Europe. I have friends that are from the UK, but I've never known anyone who's like an investor or anything like that. So it's very, very interesting some of the things you tell me. I'm like, geez, bro. Let's see. Williams Sonoma raises quarterly dividend from 53 cents to 59, and they just had earnings. What's that? WSM? Williams Sonoma. I kind of want one now. I know. Coin bar? That sounds dope. I don't know. I like precious metals. I just want to be patient. But do you guys know it's St. Patrick's Day? I'm just kidding. Are you guys eating corned beef and cabbage today? Like I am. I love corned beef. Woo! I can't wait. It's so good. Cabbage is pretty good too, but corned beef, bro, delicious. Williams Sonoma's kitchenware. Ah. Are they even popping off their earnings? Oh yeah, they're going pretty nuts. Yes, I know. Corned beef and cabbage, bro. Woo! I'm excited. One of my neighbor, he has a Traeger. I think he might do a smoked corned beef, maybe. I don't know. I don't know if they're gonna. I think we did that last year. I can't remember, but that was really good. I hope he does it again. I'm gonna have to ask him. I thought I was to drink large amounts of alcohol and eat clover leaves. Nah, corned beef and cabbage, bro. I don't drink alcohol, so I mean it might be for some people. But I don't like drinking. Seeing rainbows and leprechauns. I think that's called acid, Matthew. You just take a bunch of acid on St. Patrick's Day. Whoa, bro. Look at the leprechauns, man. This is crazy. Party is a party. I don't know how good acid would mix with alcohol, but I mean, maybe. Come to Amsterdam one day? No way. No way. You guys will get me so fucked up. The Leprechaun horror movie series. I've actually seen like parts of that, I think. That shit's funny. Oh. I love you guys. Appreciate you hanging out here after hours. I should probably go, though. I don't know what I'm going to do. Oh, yeah, I guess I'm going to go DoorDash. That might be the move. But you've seen that. I don't think I've watched the whole thing. I've just seen parts of it. I really don't watch movies. Like I said, I don't really remember. Oh, yeah. Street Dreams. That's what I watched. We already went through this, I think. All right, for sure, Schleppy. Appreciate you, bro. You have a blessed rest of your day. Enjoy your St. Patrick's Day. I'm going to get going, too. Leprechaun in the Hood. See, I don't know which one's which. I think I've just seen like a couple like clips of the movie. Of probably different ones. I really don't know. But yeah, I'm gonna get going here. Much love, guys. I really appreciate you. Thank you for your time. I hope you have a blessed day and enjoy it. I'll see you guys tomorrow. I don't think I'm gonna stream StarCraft again, but we'll see. I still need to beat that last mission. I almost beat it yesterday, but this time I know what to do. I'm just gonna cheat. I already know what I'm going to do if I play it again. But I'm out. I love you guys. Peace out, Trisha. Peace out, Matthew. Peace out, Schleppy. Much love. I'll see you guys tomorrow. Peace.